Is that working now? I don't know. Let me know if it's working. Cool. And we're back. I was sitting there listening because YouTube went to an old stream, and I was like, these motherfuckers are asking the same questions. Yeah, guys, don't forget to double like the stream. If you're live, please insult me in a spicy manner. Your wife told me to be nice to you, Carl. She said the latest t-tests came in even lower. Sorry, my bad. I DRS the stream, but it was synthetic, so it disappeared. Do you have strong opinions of long diagonal spreads? I don't have strong opinions on them. Do you? What are your opinions on long diagonal spreads? Also, that's not how you spell diagonal. We're back. I got stopped out of my puts, and we're moving up. Profits. We just need to break 3,700 so that my calls can start printing. You're a bad echo, bipolar bear. Can you say oh and then no? It's for an idea of mine. You want me to just say oh no? How much data do you have on your 3700s? They are for 930. Don't you dare. Just keep going up. That's right, you son of a bitch. Gun it. Why won't you check my DM? Why are you fucking DMing me? Don't DM me. Commission loser toozer? Who let Bipolar Bear join the fucking Discord? BTU price looking attractive? It wasn't. Close, yeah. I still like under 20, but that's not a bad price. It's right on resistance. No, YouTube was just having issues. It was going down. Apparently, it was like all the streams on YouTube were having trouble. Selling $20 puts on BTU seems like a win-win. Yeah, I agree. Puts on Google? No. Why puts? I'd be really careful here. Ooh, VIX broke 30. Oh. Why didn't anybody tell me VIX broke 30? Um, roll? Well, I know now. I don't really care about the 50 cents. It's not a big deal. I just have to do some repositioning here. All right. Bonds and oil catching large bids. T-bonds are moving up hard. How's the 5-year? 5 years moving up a little bit. Ugh. Dixie looks like it's going to push higher again. Why are all these people in here pumping NNDM? The stock looks like a piece of shit. They received court approval to rebuy 100 million in shares. On August 3rd. Fucking no news on it forever. It's not against all foreign currencies, John Dan Rockefeller. The Dixie's against the euro, yen, pound, Canadian dollar, and Swedish krona and Swiss franc. So it's got 6 component currencies. Too much volume on this SPY rise. Looks like put capitulation, MMD hedging. You mean the thing I've spent the last 2 days talking about while everyone told me the SPY was going to the floor? We'll see. It's a little early to say for sure. It's a nice rebound, but it could just be like weeklies selling off, and then they'll hedge down further dated calls, further dated puts. Have you thought about averaging down your Upstart October 35Cs? I'll probably roll them out. Those 30, those are weekly 35s. The only way they're gonna get a fill is if IV bumps. If I wanted to work at Citadel, I would just apply there. Hey. They're not covered calls right now. They're just like shitty weeklies that I'm selling off. I've never seen somebody so concerned with my shitty weeklies I'm selling. You've been going on about them for like an hour. They're worth less than a penny, and there's no buyers. Why would you sell your weeklies? Why not? They're not going to be worth anything for the rest of the day. Jimmy, $40 calls, 0 DT, safe for a few hours? Yeah, I think so. Um, ooh. Hmm. Jimmy might go up a bit more. Bounce back above 2468 would be nice. If you let something expire worthless, does a brokerage still charge you a fee for exercising? No? It's expiring worthless. You're not exercising it. I'm not gonna roll up. I'll probably just roll out. Like, just buy Theta for November. Maybe I should do that today. We'll see how the end of today goes. Maybe I'll just roll them out early. I already have November calls, so I'll just add this to them and then average. Or no, I have December calls. Shit. Maybe I'll roll those to November and then average down the Decembers and the Jans. I wanna kind of see what put skew keeps doing, because put skew keeps going up on Upstart, and with Reg Show, with it being on Reg Show now, they're gonna be buying more and more puts to keep shorting, and that's gonna drive the put skew even further out of alignment. So there's a chance that I might be able to like roll my CSPs really advantageously. Jpow is gonna say he no longer thinks it's unethical to own stock, and he's gonna buy the dip. It's unethical to own stock because they were all loading up on bonds, right? Up 50% in one day. Might be worth it to reposition those. And then DM squeeze $7 cash value trading at 240 million. It looks like a big pile of shit that someone's trying to pump. It's still trading at $2. Get the fuck out of here trying to pump NNDM. Who the fuck are these people? This is the most like blatant pump I've ever seen. I mean, if they're donating bots, don't time them out. NNDM is a long-term play, not a pump. Sounds like a hot steaming pile of garbage. If it's a long-term play and it's such a good stock, why do you have to come onto YouTube to promote it? It's like, we're gonna go tell everybody about how great this stock is. The first signal of a great investment. Have fun at your wedding, Blueberry Batman. I mean, if they complete the share buyback, it'll pump, but what a pile of shit. It's got a fucking enterprise value of negative $610 million. Current float 257.4 million shares. So they're taking out loans to buy back shares. That's, yeah. We all know how that goes. Oh, Grandpa John, I wish. Gin, Irish whiskey, scotch, or German dessert wine after a large meal. Water? I'll have you know there's 710 people, 500 of which have not liked the stream. Nothing better than wasting alcohol on a full stomach. Why'd you disappear? My power went out. Danorama. Make the chat pigeon whale only. But then you won't be able to talk in it. Which actually might be a benefit. Worth holding October out of the money for a spy run. It depends on how far out of the money you are, Seremus. So, like, I'm holding my 30s at my 3250s, but I'll probably cut the 3875s. Unless there's a big fucking bump in IV. What advice would you give on getting out of GME shares? Cost basis is 30. Asking for a friend who hasn't been paying attention. I mean, I wouldn't sell at 24. You know, you could look to sell covered calls. You could aggressively sell covered calls and attempt to exit at cost basis, but that'd be shitty, right? Like, you fucking hold the stock for 2 years so you can sell at what you bought it for. I understand there's emergencies and people need money right away, but if you don't, I mean, and you have a decent shareholding, like 500 shares or something like that, you can just use that money to generate income. Can you recommend any books on market participant psychology? I've read the usual recommendations from you already. Do you think Ann Cooling is a good source for volume interpretation? I have no idea who the fuck that is. Send me it. Actually, yes, send me it. I could probably, yeah, if you DM me on the Discord, I could probably give you a few books on market psychology if you want to read into that. Somewhere in all of these boxes, which I still haven't unpacked, I have a notebook with like a list of like all the reading and stuff I did. What's your favorite long-term interval to draw the strongest horizontals? Weeklies? Weeklies will give you the strongest horizontals and the strongest trend lines, but they're wide. Like they're too wide to trade. So you need to use like daily or 4 hour to narrow those trends down. Just imagine that everyone that made $1 off your stream liked it. Interesting. Don't stop talking. I have the rev chart up, and your voice is the only indication that my internet is still working. How would you play a potential near-term GME bounce with the SPY? Mm, I'd probably just wait to sell covered calls on it. Can you zoom in on Upstart? I'm down like $500 today. What button do I press? Do you have a do you have your own YouTube channel? Go there and dislike it. And then also hit dislike here. Nice. Have you sold GME CCs yet? No. The S&P ETF rebalance should be over already. They already fucking threshold XRT. Check your Discord. It's not great, but it's the thought that counts. Jesus Christ, average Joe. Hmm. Fixed calls saving my port. That's what they're there for. Ooh. Is that the 1 minute? Yeah, it looks like it's reversing. Yay, we're back. Fidelity Active Trader Pro crashed along with YouTube buffering, and I had to sell my 2,600 SPY profits through the web interface. It was horrible, and I somehow got out profitable. Nice, man. Jimmy like has got a pillow over its face and can't get free. That's kind of how it works. Which one did you vote for? I didn't. I can't vote. Later, M-Dub. Have a good one, man. I'm gonna try to push Rev as low as possible for the delisting hearing. I mean, that's ideal. Part of it's also, mutual funds selling off. Like, it's not an ETF, so it's not gonna track the market rapidly. But mutual funds are still gonna sell off as the market drops, right? Why? There's a lot of mutual funds that still hold Rev. Inverse chat sentiment. Jpow fucks the market into oblivion. Yeah, I have hotkeys, like macro commands for entering and exiting trades. There are now 550,000 GME shares available. Could that mean that some covering was done, even though we didn't seem to see any? Or just more shares are being put out for borrowing and shorting? So generally when XRT gets thresholded, there's a big surge in like GME liquidity that lasts for several days. It's not always bearish, it's just not bullish. Yeah, I think when they put XRT on threshold, that's when they launder their shorts on GME, right? I don't want to say launder because launder sounds illegal, but that's what it is. So they get XRT on threshold, they write a bunch of forwards and create a bunch of GME shares. They return those shares to the lenders, and they don't have to answer for them until they fail on the ETF. Do you remember when payphone calls were 10 cents? No. I think they've been a quarter. The cheapest they ever were was a quarter when I was little. Another one? What's this one? Oof. That's interesting. Can you pull that out a little bit? Away from like an hour? Like the hourly? I just want to see if it's having any like effect on the more like the bigger trend or the longer term trend. My SPX calls and puts are both green. Welcome to the club. Actually, my calls are red now again. They were green a minute ago. Lamb. That's what I wanted to see. See, that looks very exciting. Straddles are at the money. Strangles are wide. So straddles don't really have. I mean, they can have a little bit of width, but they really don't have any. They're supposed to be the same strike. Usually, what you're doing is you're buying like when you straddle, you're not really buying like you wouldn't be buying like a 36.75 put and call. You'd be buying like a 36.80 and a like 36.70, which is like a little bit of space. Like this is far more common than this. Because to do this, one of them has to be in the money, right? Oh, got a Ko-Fi. Sorry, man. Reg shows a signal. Got two questions. One, does the placement on show delay obligation VUPS liquidity demand near term, but hints at future demand? Oh, hold on. I gotta open this up so I can see the whole thing. But hints further out VUPS when now deferred obligations come due. The liquidity river may indeed run dry, but not now. Yes. In the near term, it provides liquidity by putting it on Reg Show. In the long term, that liquidity will have to be replaced, right? Because they will then tap that additional liquidity gained by placing it on threshold, which will then have to be satisfied later, and generally in larger numbers, right? Because you're now compounding the problem instead of resolving it. Like they could have resolved whatever outstanding obligations just now on OPEX, but instead have chosen to additionally compound. And this may be an effect of lower amounts of total obligations, but still wanting to produce the same amount of volatility in the underlying, right? Say you need to create 50 million obligations on GME in order to get IV to spike to 200 or 250%, which is like your like say that's your target range for IV, right? Then, if you're only able to create 25 million obligations in a quarter, you would need more time to create more obligations. And so by doing this, you can compound and maybe you can even get over your target range. For the second question, does the timing Wednesday on T3 versus Friday of OPEX of showing suggest a different kind of, I don't know the tech term here, of liquidity needed, e.g. ETF rebalance due on T3, and suggest confirmation short-term vol players walking away as they would have been showed on Friday, at least for this OPEX? No. What's actually weird about that is I think maybe they were unable to generate enough FTDs on XRT consecutively to get it listed on threshold. Like to get XRT listed on threshold, you have to not return shares that are infinitely liquid. So you have to starve the ETF of shareholding and intentionally fail to get it onto threshold, right? And so maybe they didn't start failing soon enough. But the fact of the matter is that they, got it on threshold before the ETF rebalance was complete. So possibly before the audit is done. We don't know when the audit is done in the cycle. We generally see XRT threshold on the previous Friday, like on the futures expiration date when those forward contracts close. But it's possible that the audit isn't done until the end of the rebalance period, which is Wednesday, which would make sense, right? They rebalance and then they submit to the audit. So as long as they get it off before, or they get it on threshold before the audit, that's all that should matter. And we saw them do it last year in May. It went on after the expiration. Although May wasn't a futures expiration, so that one's still a little confusing. Define long term in regards to what? Bipolar. No, the SEC is well aware of what goes on within XRT. There have been numerous reports and studies done on it. There have been entire papers written and submitted to them to no avail. What do you think about 1118 $40 calls for GME? Why would you buy them now? Would be my first question. It's frustrating, but it's also, very telling in some ways that, XRT being on threshold is integral to their ability to move forward cycles outside of their due dates. A few weeks out. I mean, I would buy November 18s for October OPEX. Although I would have to look at, I would want more time to make an assessment of anything happening on October OPEX. But I will be buying like some exposure for that. For November OPEX, I'd be buying December calls. Yeah, probably. True state. It's not racketeering or manipulation. It's all legal. No, there's no deadline. GMCC2. It can stay on reg show as long as it continues to fail. The longer it's on reg show, the more it will fail. Unless they rebalance every day. I like cats. They're okay. I don't have one. I'm allergic to them, but I like them. If SEC doesn't respond to the research paper, how about try sending them guillotine schematics? I mean, they had an entire internal investigation into XRT like 12 years ago that yielded all the information I'm giving you now. Like, this is from SEC reports. That's where we learned it. And then, they had 30 comments on that about the ability to, and one of them specifically, which was, disregarded, was about the advantageous conditions under which a threshold ETF is exposed. Bad wording. The advantageous conditions created in when a ETF is threshold. There we go. And it was just the comment was ignored. Like, there was no change in regulation due to it. Given so, would you buy shares or just calls? If there was a market crash, Costco would definitely be something I would consider buying at the bottom. No, I'm not out of Fubo. I have like 15,000 shares of Fubo. Why would I be out of it? It's still $4. With volatility shorters walking away and coming back in now, is it possible to see a deviation from F-Man to a different OPEX cycle period? Yeah, which is why I'll likely continue to get exposure to each period until we have more data points. And they definitely fucking walked away. We were going over the like the options data and the comparison on options data between XRT and GME, and they just, like, after March, they just left, like, the market, not just GME, right? Like, they fucking walked away from everything. And then, you start to see them come back in towards like early August, end of July. Like you look at like puts and calls on XRT, and you know from like May, from end of March really through like end of July, the puts and calls just fall off like this, and then they pick back up like that. Like it's fucking crazy. Mike's cutting out. Uh, Maybe I'm too far away from it. Volatility shorts. Why do you think they left after the split? They left before the split, and they probably left because of it to some degree, but they may have also left because they thought that the market was going to crash. Remember, being short vol is extremely risky if the market is going to crash. So ideally, when you're short vol, you would catch a bear rally and exit everything, which they did in March, right? If you think about March OPEX, it wasn't just GME, it was market wide. So it was the perfect opportunity for them to get the fuck out, cash on the side, or go long vol, waiting for the downturn. So I don't think it was only because of the GME split, but I think specifically GME was stepped away from for a longer period of time due to the split. And that's why we see that May OPEX that's so tiny compared to all the other ones, right? And March, which is massive, right? So March, they clear everything out, close out their positions. You know, May is just the rollover from whatever was left, like the additional obligations. And then they just stopped shorting the stock after May. And then what we see is we see retail interest pick up because of the split. And we see natural price discovery occurring on GameStop for a period of about 3 months, where, you know, the price just continuously climbs as retail buys more and more of it, right? But very slow, not volatile, just slow, steady increase in price. Then we see the shorts come back in when it becomes advantageous to short again at the beginning of August. And all of the data is there in the options chain that backs up that positioning. Yeah, hindsight is 2020. I mean, we had very low confidence from like after June didn't play out. Like July and August OPEXs didn't really have very high confidence levels. Like we had a lot of confidence in the August ETF FTDs because we knew those were high. Um, but like August OPEX, I mean, confidence is pretty low. September OPEX looked really good. But if they just started shorting and building up obligations again, there's nothing to clear yet. And so now, you know, we get a double cycle like we did in November. After November into December, January, we get that double cycle of shorting, which then leads to obligations likely in November. Yeah, I can play the Jpow speech. I gotta find it, but I can play it. I gotta buy puts first. Hold on. Uh, Shit. Okay. 1 second. Let me find the Jpow speech real quick, and then I'll get to your member chat there, man. Okay. I got that up and running, and then... Okay. What the Deus Ex Machina crime gang fails to grasp is the real villain is compliance. Banks, SEC don't care about following the rules, just looking like they care about the rules. Comp departments exist to help banks break the law by adhering to the letter, not the spirit. Yes, exactly. So after what you just explained, what's your general GME game plan moving forward? I mean, I'll continue to get exposure to ETF, FTD, and OPEX periods every month. Safer exposure when I have less confidence, more risky exposure when I have more. And I will continue to, sell CCs during periods in which it is beneficial and assignment is unlikely. Because I think, I've our predictions of the highs and lows of GME price action, as far as selling CSPs and CCs go, are still very accurate, as GME very closely follows its options, its option Greek neutrals, in terms of price action. So I'm pretty confident in continuing to do that, and then yeah, I'll continue to get exposure to OPEX events. I have no intention of changing that strategy, even if it does result in more losses than wins. Once we get some more data points, if things continue and we don't have another big break in the cycle or any big news events, hopefully the cycle will normalize again and we'll have a better continuation of it. Thoughts on Cat? I like it. I bought a bunch of calls today. I bought some yesterday. I bought a few the day before. If we're considering November, we're already in the December part. So on October 11th, we could expect some sort of action from forced settlement on XRT, maybe. We did in January. We didn't in May. We may see it this time around. We'll see. And then, we'll be looking to November, like early November, for another round of ETF FTDs. And then we'll be looking toward November OPEX for the next, like, significant run. We're closer to a market crash now than we were back in March. You really think so? I mean, they could have just reduced exposure. Exposure they carried over from the bull market, right? I mean, the market high in March was significantly higher than we're at now. So it's very possible that their risk, that they consider their risk to be not detrimental at this point. or they can concentrate their positions into ones that are the most profitable and least affected by market influence. So instead of being short vol across the entire market, they can narrow it down to sectors where they're comfortable and risk is reduced. You don't stop making money as a hedge fund. You can't just pull back your entire strategy and not do it anymore. If you have to do that, you don't have a very effective strategy. I'm saying they left at the top of March. They started pulling back their puts at the top of March. Remember, and so they just shorted GME into May. Our fucking borrow rate went up like to 100%, right? So they stopped using the ETFs in March. Then they moved forward with shorting the underlying, which they started to do into the March run, right? We see the borrow rate and utilization of GME's lending pool, its direct lending pool, rocket up through that period, which was probably, you know, now in hindsight, a signal that they had stopped using the ETFs. You know, at the time we thought it was that the ETFs didn't have any liquidity left, but that wasn't the case. It was that they didn't want to use the ETFs anymore. So they walked away from the ETF exposure, shorted the stock just the normal way, cleared that shit out, and then walked away until just now, after August 16th. Oh shit. Yeah, I have the speech loaded. 1 second. I don't think it's started yet. Yeah. 2 more minutes. Missed a Ko-Fi. Sorry. Given the market's poor reaction to the 0.75, would you expect Jpow to try to restore confidence? People sell off puts and rally into close. Yeah, I think this has been a little more damaging than the Fed expected it to be. I think he tried to ease the 0.75 hike, you know, by saying, you know, they're not going to back out of MBS, and you know, they could see a pause in rate hikes and a reassessment, not in the near term, but once they hit that aggressive rate. So a lot of the market, a lot of the things the market's pricing in right now is that aggressive target. It's not really pricing in the 0.75 hike, it's pricing in the aggressive target range. So, you know, if he can pull back on how quickly they intend to move into the aggressive range, then that could restore some confidence in the market. I don't know if we're going to see that today. Honestly, today I kind of expect them just to say the same shit they said 2 days ago. Win puts on Sava. Wait, Sava went down today. I would wait until Tuesday next week is going to be the last rolling period for the T+2 on that. And I need to look at gamma exposure over the weekend, but I'm probably going to buy calls on Sava on Monday. There's still another shot at some upside there. Okay, hold on. We got the meeting up.
It's terrific.
Let me,
So these sessions started just a few years ago in 2019, in what turned out to be a very different time. They were valuable then, and we've continued to benefit from them as we've navigated the pandemic shutdown and the path to recovery. So we started with listening sessions around the country that brought together people and organizations representing businesses, low and moderate income communities, workforce development enterprises, employee groups and unions, community colleges, retirees, and many others. We wanted to hear directly how our
the fucking terrible mic guy again. Yeah, it's not my fault. It's just the mic.
So then the pandemic comes and upends everything, the way we work, live, learn, and conduct business. And we kept these conversations around Fed listens going. And we thought we gained valuable insight, which continues to help guide our policy decisions. And I also think we delivered good transparency about how the Fed works to the American people through this process as well. So these events have now become a permanent fixture of our broader outreach. And my colleagues and I remember, I'm sure we remember each one of these events that we've been part of They're really the real life embodiment of our policies and the way they affect the people that we serve. And they do inform our thinking as policymakers. So we continue to deal with an exceptionally unusual economic set of disruptions. As policymakers, we're committed to using our tools to help see the economy through what has been a uniquely challenging period. The insights you share in these events help us to home in on the challenges and opportunities that are shaping what we might think of as the new normal of the American economy. And it'll inform us as we try to get there. So my colleagues and I are very happy to hear from our participants today, to host those of you who are tuning in to listen, and to do the work that we do on behalf of all Americans. Thank you. And with that, I will turn it over to Governor Bowman, please.
Thank you, Chair Powell. Good afternoon, everyone. And I'm so pleased to be here with you all today in person to moderate today's discussion. And I just want to express my thanks to all of you for your willingness to travel to Washington, D.C. to be with us here today for this Fed Listens event. Over the past year, we've held a dozen Fed Listens events across the country, hosted by our reserve banks. And we found these conversations to be a very valuable resource for us as policymakers. Hearing directly from people in different communities about how you are experiencing the economy helps provide important context.
What is it,
economic
BMG?
data to consider. These discussions help us develop a richer understanding of how economic conditions are impacting people in their businesses and everyday lives. And it helps us think about how we can best achieve stability.
Daddy
and
J, for
support
once in your
for the
fucking life,
economic
just be the
well-being of
ugliest
all
of
American
bears
families.
and absolutely tank the
Today,
fuck
and
out
in
of the
other Fed
market.
Listens events
Fuck
over the
you. I
coming
only
year,
have like 10
our intent
puts.
is to shift the focus of discussion toward understanding
Don't
how
be a
the
dick,
pandemic
BMG.
experience has reshaped the economy and the workforce, and the challenges and
Just because you
opportunities
threw
that we
$100 in
face during the
SPXS
transition to the
doesn't mean
post-pandemic
when we
economy.
need the economy to
So with
crash.
that, let me turn to our first set of panelists, who bring with them direct knowledge and experience of how the economic landscape is evolving for U.S. businesses. They represent organizations that include small businesses, manufacturing, supply chain management, and the hospitality industry. I know that all of you have experienced firsthand the extreme economic and financial hardships brought on by the pandemic. And during the economic recovery that has followed, you've likely also seen rapid and substantial changes in supply and demand conditions in your industries and in the communities where you live and work. Given those lived experiences as business leaders, we are especially looking forward to hearing each of your perspectives. And as we hear from each of you, I'd like to invite my colleagues to follow up with any questions that they may have. So let's start with our first panelist. I'll introduce Tom Henning. Tom, thank you so much for being here with us today. Tom is the CEO of Cashway Distributing, a wholesale distributor of food products for convenience stores and food service establishments in the Midwest and the Great Plains region. Cashway began in 1934, delivering candy to local grocery stores in Kearney, Nebraska, and the company now manages an inventory of over 20,000 products. Cashway has remained privately held by the Henning family, with the second and third generation family members involved in the business today. So Tom, for our first question, could you please describe how the pandemic changed the demand for transportation and warehouse services? And to what extent are shortages of material and labor still affecting your business and industry?
Thank you. The pandemic changed demand for transportation and logistics services in some manners that were expected and some that were unexpected. After the pandemic, we expected a fair amount of pent-up demand that would be released, and it was. In fact, probably the demand that existed out there was greater than what it was pre-pandemic. But what wasn't expected next, before the pandemic hit, was the demand for workers would exceed the supply by a larger margin than what existed pre-pandemic. The size of the workforce became much smaller than it was pre-pandemic. We also believe that many left the workforce, and for a variety of reasons. And we were wrong on that too. We really thought the workforce would grow. There was a shortage of truck drivers and warehouse workers prior to the pandemic, which the pandemic further exacerbated. The shortage of truck drivers before the pandemic was estimated at 61,000 drivers. Today, the estimated shortage is in excess of 80,000 drivers. The shortage of drivers was an issue then, and it'll be a much bigger issue now. And the prediction is it will be an issue in the future. We've seen some estimates that the shortage will double by the year 2020. And to give you an idea of the size of the driving force that is out there, the universe of truck drivers today is 1.53 million drivers. So you take, a 5% shortage, a 6-7% shortage, it's going to be significant out there. As a result, the cost of labor has increased significantly for everyone in the supply chain. With the supply of labor down, the competition for drivers heated up immensely. There was an extreme amount of pressure on the transportation and logistics side, and still is, and probably will continue to be for the foreseeable future. In order to attract and retain drivers, our company raised our wage rate 3 times in 2022 so far. In 2019, we gave all our employees free health care. And then we gave all our drivers and warehouse workers retention bonuses. If they stayed with us to the end of the year, they would get a bonus paid out on the 30th of January. And that did much to solidify the workforce. Then there were the supply chain issues. And the shortages of products we sell every day from our supply chain vendors was significant and still exists at a high degree today. Prior to the pandemic, and we measure our inbound fill rates from our vendors every week. We have a number of metrics that we utilize every week. Our inbound fill rate from our vendors was 99.2%. So for every 100 items that we would get in, or we would order, we'd get 99.2 in. Our inbound fill rates, right after the pandemic started, dropped down to about 55-60%. By December of 2020, it was up to 90%. And in 2021, we had a pretty good start, and then it dropped to 78 to 80%. And this year, it was probably in the 80% range, 82% range. And for the last 10 weeks, it has been running 90%, which is good news. We changed our inventory philosophies because we had many customers out there that depended on us for products. So we started loading up our inventories. We used the popular inventory philosophy of JIT, just in time. And then we changed it to JIC, which is just in case. So we're over inventory, but those people need products. A restaurant who has got an event planned for Friday night and you make a delivery Thursday and the product isn't there, he's in trouble. And our business is all about customer service. As a rule today, most of the time, we don't know what we're going to receive from the vendor, and which is kind of unusual. There are many challenges for the vendor community out there. A lot of it has to do with raw materials. They have labor problems also. They've got priorities on certain lines that they're producing. And so anyway, most of the time we don't know what we're not going to get until the truck unloads, or we might have a call from that vendor, which is a switch from the norm. And the timing of deliveries is probably not as great as it was pre-pandemic. Since the pandemic began, our vendors have eliminated over 900 items that we no longer have. And especially in the convenience line, that's where we really notice it. You know, between wages, worker shortages, the price of fuel, and the supply chain challenges, our costs have really skyrocketed. We believe and have gone through our numbers and look at the inflation numbers. We look at our inbound freight rates, understanding that we get probably our products from growers, from shippers, from manufacturers. So they have freight into their establishments and their freight costs have increased. We have got freight from their establishments to our warehouse, and then we've got charges, freight charges basically, that are built into our pricing to our customers. And we've been trying to calculate what percentage of the food inflation is relative to transportation and logistics. And we've got kind of a consensus between all of us that probably 38 to 45% of the food inflation that we're feeling right now is because of logistics and transportation. It could be greater. It could be greater than that. We do a cost index report on our total product mix, and we do that every week. We started doing that about 25 years ago, and because obviously you've got to have growth, and you've got to have organic growth, and the difference between the growth you're realizing every week.
Did I miss anything?
And inflation is basically organic growth. So our cost index report, and I've got numbers from, I think, since
Who the fuck's this guy?
Since 2020, indicate where we've been, the path we've been on.
Looks like
This
old
last
Andy
week,
Richter.
Our inflation rate was probably the lowest it's been in, I'm going to guess,
Tom? Who the fuck's
probably
Tom?
4 or 5 months. It was down to 10.3%. But yet, compare that to what the inflation rate was the same week.
Tom's definitely an
the year
alcoholic.
prior. Our total inflation from 2000.
You can tell because of the swelling.
22, 23.
Or he has syphilis.
in that
Maybe
range.
Tom just fucks.
So we're seeing some drop there along the line. We're also seeing some softness in the marketplace, which probably is.
Is his name Tom Harding?
Why the inflation rate is lower. On the other side of the coin, we still have increases coming through. We're still struggling with product shortages and labor. Product shortages are occurring for a variety of reasons. One of the big factors that's going to have an impact on inflation, probably yet this year and probably next year, is the drought we've been experiencing. I can tell you right now, and we hear this from the potato growers, we've seen the price on what we call Baker's potatoes double in the last couple of weeks.
Guys, long on
And
potatoes.
this last year, the potato growers in the Idaho area, which is really the prime country for growing the kind of potatoes
Oh, shit.
a food service establishment likes to have, they knew they weren't going to get water. So instead of planting potatoes, they planted wheat. And so now there's going to be plenty of wheat that comes out of there, but the potatoes are going to be thin.
Are we
There's an
rolling wheat
extreme
into
drought that's hit
potatoes?
in California. And California is a big producer of food that we consume. One of the products we're not going to have this year is going to be pears. I remember in 2012 when the drought hit, and we sell a large number of school districts.
Someone want to figure out the best way to get exposure to
fruit mix.
potatoes?
We imported peaches from Israel, and Israel has, and that was probably the only place, some of those products were available. So we may be in that same boat here down the road. Tomatoes are a little bit on short supply. The other thing that's happening,
That's not true. You can grow them in your kitchen.
Of the country, along with Iowa and Illinois, and we've had a lot of drought there. We're finally starting to get some rain. One of the things that happened last year, and you read about this and you heard about it, because of the war in Ukraine, the price of fertilizer, nitrogen, potash, and phosphorus just went off the charts. Nitrogen went from like $200 a ton up to $930. I know for a fact there were many farmers out there that were doing a balancing act. How much less of this can we use and still grow a crop? And what does that add to my costs? So my guess is going to be that we might find our production of maybe corn and soybeans maybe down a little bit this year. And depending on what
I'm
happens,
just gonna go
next
buy
year
him a
and the
bunch of
experience
McDonald's
factors
French
they've
fries
got
and keep
there
them in my
may,
closet for the
have
year.
an impact on whatever some of the commodity prices
Did the
are.
did the closed
The beautiful
captions just
part
say
in
nitrogen
our area
fought
of the
a
country is
Haitian?
that the
Yes.
cattle market is good, and we're starting to get a little bit of rain now. But if you look around the world, you go into South America, you go into China, you go into Europe, and it seems like every continent is having their share of drought. And so this might be a factor all in the future for food production, and especially the near future. That's just a personal opinion. Labor is still an issue. The driver pool is still far from being adequate. We have a driving force of 250 individuals, and we have positions we work to fill every week. There was a time during the pandemic we were short 20 and 30 drivers. We have one supervisor for every 10 drivers, and they drove all year. They drove vacation routes, time off for other drivers.
This guy's here to
and the like.
to let the shorts
Sorry
out.
about that. I forgot to turn that on. If I can find it.
All been there.
Sorry about that.
No problem.
Interesting ringtone.
Maybe to our second question, which is about what your business outlook for next year.
I was just going to get into that.
Okay, great. And what other challenging issues might be facing?
Who the fuck is
You
Tom
know, our business
that he just
outlook for
dropped
next
like
year is
$200 million
good. I wouldn't say it's
out of the
great.
fucking SPX value?
First off, we sell commodities. Our company was founded in 1934, and that was during tough times.
I'm gonna get this guy on the show.
It was founded in 1934, and the products we sell are really, in a sense, recession-proof. They're people have got to eat, so we're looking for probably a fairly decent year. On the other side of the coin, there's going to be casualties.
He's bored the
in
market
the
to death.
marketplace, and we could have some short-term challenges out there. And the way we're dealing with that is interesting. We're working programs right now to keep our customers profitable, and we're reaching out there because I mean they're the lifeblood of the organization. And I think during the recession in the '80s, there were a lot of folks that didn't have a lifeline. Communication wasn't great, so we're reaching out to those folks now. We need to see them through this thing. And it's not a matter of extending them more credit. It's not a matter of
It's not funny. Tom is destroying our fucking markets.
It's helping them better manage their business,
I only have 10
make
puts.
it more profitable.
If I knew
So
Tom was
that's
gonna
gonna be-
fuck everything,
that's
I
gonna
would have
be
bought
one of
more.
Challenging issues we have. The other challenging issue we really have, and this is critical, I think there's rough, I can't tell you exactly.
Tom
There's over
shat
2
on my
billion
weak
trucks in this
calls.
country. We have not been able to upgrade.
Oh, dear
our
God, he
rolling
did.
stock, our rolling stock for probably 2 years. We have 250 tractors. We have 400 trailers.
Someone
we
take
need
this
to make the
motherfucker's
deliveries.
mic away.
We haven't been able to acquire a new tractor since November of 2019. We typically replace 10% of our fleet every year. The last tractors that we purchased in November of 2019 cost
Is Elon in this
$106,000,
committee?
and
Can he
it's
come
pretty
in and
much
talk about how
standard-
they're opening a new gigafactory?
standard product that we buy. Got 5 coming next week. They're $165,000 a tractor, 40% increase.
She's just whining.
We've got to pick slots now. we're guaranteed kind of halfway of
Tom is a
having
bitch. I'll
probably
say
20
it.
tractors.
Yeah, I don't like Tom.
We really need
Hold on, I
50.
gotta put stop losses on my fucking
We're
puts.
guaranteed to have 20 tractors in 2023. So we're gonna spend probably 5, 6, 7 years getting things caught up in our fleet. The cost of putting trucks on the road today is very significant. It's gone up right around $80,000. So that's going to have an impact on transportation total. And when you look at the number of trucks in the country, and
Plop
the
torn.
options aren't great.
Plop shit,
We
Tom.
had a number of trucks sit this last year for 7, 8 days because we didn't have microchips. They were 2017, 18 models. The parts availability, tires is one big thing. On trailers, insulation. We had trailers we ordered 2 years ago that we finally got in the first part of this year.
Check potato
Those
futures.
went up 40%.
I don't want
so
to.
40% sounds like probably an average cost increase that we're going to see with rolling stock for any operation out there. So I think I'm getting down to the end.
Tom, how does that inflation?
Yeah, I kind of already do that
these
first name.
necessary replacement items, how does that impact your outlook for going forward, or changes to how you prioritize expenses in other areas?
One thing about it, you got to have the cash flow to do it, and you've got to have.
God, this guy's just drooling short liquidity.
So that will be the challenge in developing a plan, a business plan, which we will.
Tom is the CEO of a family business.
I think.
But what family business?
in our
What's his
company is
expertise?
sound and
His
solid.
grandfather
I
started a
don't see
business?
problem there, but I do look at other companies in the industry, and I think they will have some challenges there along that line. And there's some options out there that they can certainly use. But it's
Callahan
going
Automotive.
to be a challenge. We spend more money today on just maintenance. A vehicle gets so old.
His grandfather was a potato.
The other thing we need to do that's going to be important is we need to get the manufacturing of a lot of those component parts back here in this country. And I could give you a list of things that we have to source outside of our country that put us really in somewhat of a predicament when it comes to keeping your trucks on the road.
Thank you. We'll probably follow up with you to learn a little bit more about that. But I'd like to ask my colleagues if they have a question.
Yeah, just a couple, one narrow, one broad. The first question is, are you able to pass these costs along? You obviously have been hit by, costs right across the board. And the second thing is really, do you feel like we're getting through this process? That there was enormous disruption to your business and many others, and all these cost increases and shortages and everything. Do you feel like, and I guess there's not that much progress with the drivers, but do you feel like we're getting back to a better place with the suppliers and the customers yet? Or is there a sense of progress?
I think there is a sense of progress. We're making the move, and I think the moves you make are extremely important. And I think that'll get us in the right direction. And applaud you for
Well,
it.
now he's just kissing Jpow's ass.
I do think that we're moving maybe a little faster than what I thought in terms of the economy and everything. So no, I'm confident we're going to get there. We might be the only thing I'm not confident in. I remember when when the pandemic hit
Stick with the
us,
confidence.
They said, in 30, 45,
I have calls,
60
you
days,
asshole.
things will be back to normal. I think what we're encountering right now is going to take a period of normalcy. It's going to be probably 2, 3 years off, 4 years off, maybe. We've got to get caught up. It's not going to happen.
I have both.
overnight.
And on costs, you've been able to pass those right along? Since
Yeah,
these are-
we have. And the dollars we work with are large enough. And the customers really don't have a choice. They don't have a choice. We can't lock in old pricing unless they've got contracts somewhere out there. We can't lock that in. And so they end up having to pay it. They're so voluminous right now that part of the problem is you don't know what the cost is. If you asked me what the cost of eggs were, I could tell you probably in a few minutes because someone just told me what they were paying here a little bit ago. But
How the fuck do you not know what
I mean,
eggs cost?
It's fast and furious.
This guy doesn't know anything about the common man.
Higher prices, demand is still there.
Eggs are
Demand-
$5.65.
And I suppose it's a question of the amount of money that is still floating out there, in the economy. The bad
You could have
thing
just made up a
is gonna
number.
be the lower income people that really take a beating. And we've, anyone that's in production, if they're in sales, if they're in manufacturing, whatever the case is, their salaries have kept up, drivers and everything. But we've
You
got
guys
a layer
aren't
of
buying the
people
right eggs if they're
out
that
there
cheap.
that,
You should be
haven't
getting
had a lot of-
grass-fed,
haven't had a lot of
free-range
opportunities
eggs
for
with no
increases. In fact,
antibiotics.
right now, one of the
You can't just be buying
things
white
we are
eggs at
doing is
Aldi.
taking every one that hasn't had an increase and figure out how we can give them one, and how we can give them one that's substantial enough. So that's going to be a challenge, probably for everyone down the road.
Thank you very much, Tom. We appreciate your perspectives, and we'll move on then.
This is
to
why
our
you have
second
low
panelist,
T, Carl.
Chidi Kumar. Chidi is the chef and owner of Garland, a restaurant and performing arts space
I fucking
in
love
Raleigh, North
Aldi.
Carolina.
Don't
Chidi's
you
a
trash it.
self-taught cook who studied recipes while pursuing a career as a guitarist in several rock bands.
Oh,
She
thank
was
God.
a semi-finalist for the James Beard Awards Best Chef in the Southeast from 2017 to 2019 and was a finalist for the award in each of the past 2 years. Chidi participated in our board Fed Listens event last year, and where she shared compelling stories about the challenges that she faced running a restaurant business during the pandemic and in the early recovery period. Chidi, thanks so much for being here with us in person this year so we could actually
This is the
meet you
most.
face to
Hold on,
face,
hold on. Guys,
so that you
everyone
can
be
share
quiet.
also your perspective
We're
on
about to
how
get the
things have
economic
changed since
opinions
last year.
of a
So
part-time
our first
guitar
question for
player
you is about how
and
your
runner-up
business has
chef.
changed, actually, since we spoke last year. How does customer demand now compare to what it looked like before the pandemic? And have you seen changes in dining patterns that you think could be long-lasting?
Just ask her if she owns
Thank you,
AMC.
Governor Broman, and thank you for having me back. It's a pleasure to be here. So our restaurant, music venue, bar complex is one
Complex?
building that we have been paying rent on since 2010, and we closed our doors at the end of August. So there were many factors leading to that decision, and most of them are really, I want to say at the outset that I'm a restaurant owner, I'm a chef, and we're working on a new project. I am speaking from my perspective as an independent restaurant owner. Restaurants are ubiquitous. You can eat at a fast food chain. You can eat at a fine dining chain that's in airports and hotels all over the country. Their perspective is going to be very different than mine, and I almost wish that we had a different name for our sector of the industry because our challenges are unique.
You sell booze, woman.
and,
You
the
sell
way we
booze and you went out of
approach
business in a
those challenges is very
recession.
different because the math is very different. So for us, so many factors led us to decide to close our doors, and the main thing is that dining patterns have changed. Our restaurant has been located in a city center of a very small city. We're the capital of North Carolina, and we're surrounded by government buildings and law offices.
Wait, you couldn't
lots
sell
of tech
booze to
companies,
politicians and lawyers?
architects, small firms of that nature. We relied on presence in that aura. People would come to lunch, and whether they ate with us or not, they were aware that we were there.
Why is nobody asking
Those
the real
mostly,
questions?
professional white collar workers. Well, they didn't work downtown anymore, and they discovered new eating habits. They cooked more at home. They got food from CSAs, farmers, which is awesome. They've discovered their neighborhood restaurants, and they just approached dining out differently. And
No,
they didn't maybe want to make
they
a trip
stopped going to
downtown,
work.
struggle to find parking, and navigate construction that has been ongoing. Construction has not slowed down from my perspective. In fact, things take longer to build, and I know this because we're building out a space right now for our new project. So
Don't build it next to
the
a
project
fucking
starts,
office.
and then you wait 2 months for an electrical, a little breaker switch or whatever, 2 months. Or for
I
a
can't
meter
watch
base,
this.
which
This is
nowhere to be
triggering
found,
me
or
all
copper,
over the place.
whatever it is.
I'm
We're
triggered
not the
now.
only downtown
I
that
need
has a lot of
I
construction.
need a
just
security
sort of
blanket.
dragging on and on. And that doesn't really invite people to come to your restaurant, right? I go to Nashville and I see the streets are dug up for years, and there's a restaurant right behind that. You know, it's very easy for people to say, let's just go somewhere else. And they discover a new spot and they go there, you know, and there are a lot of options when it comes to dining out and dinner and how you approach your food for your family and for yourself. So we're very cognizant of that, and that's very.
May I offer you an egg? Is it pasture raised?
And you know, during the pandemic, all restaurants, I think, were faced with decisions on how to pivot. You know, that the P word that keeps rearing its head.
I can't
and so we all
believe this
tried things that
meeting
were
where these
completely
people
outside of our normal way of
are having an
operating.
effect,
Fine dining restaurants started
like a
to do
visible
things and
effect
takeout, and so you could
on the
get,
markets.
maybe you were mailing something from Goldbelly. So
Fucking
doing
Tom
things
just
that are
got potato
completely different
futures
for
to
us were not built out
skyrocket.
for these kind of operations, but we did them. And so
And
you start
eggs.
thinking about different ways to operate, and the consumer is kind of connecting with you in a different way. So things are still really very much in flux. I don't think that we've settled into what an independent restaurant looks like and what this industry looks like, and I don't think that we're going to get there for another.
I don't think you know
3 to 4
shit about the
years.
industry.
But in this meantime, you know, people who have 1 or 2 shops, we can't really sustain.
Are you sure you don't want to
this
watch
much
the economy
change and these many
implode
losses
in
for
slow
that long.
motion
If
by
I
statements
had
made by
100 shops,
Sheedy and
you
Tom?
know, making a very small
yeah, I don't.
profit or very small loss, you're kind of, it's an aggregate. You're looking at the health of your total business. But for us, several weeks or several months of, you know, what are pretty big losses for us, very difficult to navigate. So we're trying to, within our footprint, within the
Industry
menu
expert
that
with
we
failed
are known
restaurant
for,
speaks.
within
Yeah.
the type of service that we do, the way our dining room operates, how many people we need to work in the kitchen, how many people we need to prep, how many people we need to get a guest from the door to, you know, the table, and then what happens after they place their order, and all of those little steps. Restaurants are basically dependent on a series of repetitive steps, and all of those are very time sensitive. There's no malleability, there's no work from home, there's no take your time, because if the guest has a bad experience, you'll lost them forever, right? And if you don't know that that's happening,
Put up
because
a
as an
seat
owner
yourself
operator, you're
sign.
also working. You're no longer just overseeing. You're washing dishes and you're cooking and you're prepping and hosting and bartending, and my husband and I have done all of these things many times over the last 2 years.
How important is
You're
it to
gonna
hold
miss
above the June
that
low? Pretty
those
important.
details. And that kind of, all these little cuts kind of cut down your business, and they cut down the level in which you really want to be operating at, and that the guests, you know, expect. And that's not to say that we.
Jpow's whispering under his breath. Fuck, there goes my soft landing. I just had to invite the living potato, and the chicken couldn't sell beer to an
Places
alcoholic.
like ours, you know, our staffing situation has been just like Mr. Henning alluded. It's always a difficult industry to staff, but now
Like this whole
possible sometimes.
symposium would be
I do
fine
feel like it's
if it
getting
wasn't
a little
having an
bit
effect
better,
on the
but,
markets.
you know, we've lost a lot of our young people who we might have considered as career
Failed restaurateur
hospitalarians.
and runner-up
They-
guitar
they
player.
maybe want to get a job in tech sales, or
Like, why would they
go
even
back to
talk
school,
about
or maybe
hobbies?
become a nurse.
Who the fuck
That
gives
would
a
be an
shit what their
ideal way
hobbies
to
are?
go, but you know, we can't really compete with those kind of benefits. We can't compete with not working at night. We can't compete with work from home. We can only offer so much paid time off, and that demand kind of gets sucked in by, or you know, completely obliterated by people getting COVID. And you know, so from the start of the pandemic until this May of 2022, we had maybe 3 people with COVID. And between May and August, probably 80% of our staff had COVID at one point or another, myself included. And we are very careful. We test all the time, we mask and everything.
Chat is
So,
auto-repeating itself.
you know,
Old
the way the
comments about
pandemic
Tom coming
is,
through.
affecting day-to-day
Thanks,
life
Bipolar Bear.
isn't as data-driven as it is now. It's just a reality, right? So if a cook is out for 7 to 10 days. I mean,
I'll be right back.
In 2019, that would be like, you can't do that. That's unheard of. Like, what do you have? The measles? Like, what? That never happened. But now we have to sort of think about how many people we need with those contingencies built in. But yet, the cost of each person's hourly wage is, 15, 20% higher. Our revenue is unpredictable because of the way our demographic in our part of the city is. And if there's a variant that was raging, that was more of an issue maybe last year when it was. Now it's just everybody gets COVID all the time, it seems like. So it's not this like wildfire that, ebbs and flows, but we've had to sustain the losses throughout that time. So, so we have our labor costs going up. And then, your question, Chairman Powell, was, can you pass that increased cost down to the customer? Well, we're the customer. We're the end game. And we can only raise our prices so much. So, when you go to a restaurant, everybody goes to a restaurant and they see a chicken dish or a pasta, an entree that maybe previously in a nice restaurant was $28. Well, now it's maybe $34, but you're not going to pay $45 for it. I mean, you're just going to say, that's insane. I can make that at home. And, you think you can. Some things you can, and some things it may not be quite as good, but it's still dinner, and you'll survive. So there's sort of this like we reach a ceiling of not being able to have anywhere to push those costs for us down. So we see fuel surcharges on our invoices from deliveries. And again, as an independent restaurant, I'm a chef operator. I make creative decisions anyway about how I cook, what I put on my menu. I work with a lot of small farmers, but they're leaving too. They're getting tech jobs and web design jobs because it's hard for them to find somebody to help harvest their crops and bring them to us. And it's a small operation. So yeah, I mean, I'm not sure if that directly answers exactly your question, but there are so many factors that go into a very simple decision on where am I going to have dinner tonight. And it's everything from your location, what happens in your neighborhood, where do you live, what's around you, how much are you prioritizing, supporting local, are you feeding a family, or are you, a young couple with disposable income, who is able to operate? Is the restaurant that you normally go to able to have all of their sections open? Or did 4 of the 7 servers that they have call out today? And so you still have to open, but you can only sacrifice so much of what you can and can't do. You can't say, hi, welcome to our restaurant. We have 3 of the 9 items from this first section available today, and 2 of the entrees are available. I'm so sorry. You'd be like, what is this? Like, I'm never coming back here. But in reality, I wish we could do that, because sometimes you just really have to say, can we open or not?
Well, thank you so much for your excellent answer to the first question. It was so good. You answered my second question, which was about inflation. So if there's anything you would like to talk a little bit more about, you talked about wage inflation, but the input inflation, you talked about how you can't pass it along. Are there other concerns? And I would like to open it up to my colleagues too.
I have a quick thing to add.
This is both awful and amazing at the same time.
Of small brick and mortar places, real estate has been thriving and growing and booming, and that's great. But
was a part-time guitar chick upset because her business she started in a bull market with a labor surplus is suddenly not profitable because you can't pay people shit?
So
paying an economy with a labor shortage? Either way, keep talking. My puts are happy.
Food cost, 30% labor.
But what about my calls? Like, the puts are fine, but the calls.
Now, labor is hovering around 48, 50%. Your food costs have gone up to 35. So there's 75%. Credit card processing fees keep going up 3.5 to 4% off the top. Rent is now, where does it fit? You just, after a point,
have a fancy dozen on me.
You haven't paid all your bills.
Around here, we just get down the road and
so,
a spell and get them straight from the chicken's behind. Yeehaw, Gherk.
And that kind of
thank you, Swanee.
We're lucky, we utilized an SBA program and worked with a local
Subtitle
bank, and
literally
we've been in
said
business
blah
for a dozen
blah.
years. We have a presence in our city, but that's not the case for everybody, and that's not accessible for everybody. So, rent going up and everything else going up, and the ability of a small independent restaurateur who has a dream and a vision.
Next
and
time
really
they will
wants
be
to invest in
interviewing
it.
other local business owners like Trey's dads, who owns a local
So
bull
thank you for that
milkery.
presentation. Just have a quick question. You said that this was a performance.
They're doing
and
it. They're actually
performance-based
doing
and
it.
restaurant.
Bearish as
Most
fuck.
of
I
the
love it. It
conditions you
smells
talked
like
about
money.
had to
Fuck
do with
Wendy's.
restaurant
We
business.
eating steaks
Are the
tonight,
conditions
bitches.
the same
Riku.
for- It seems like
Thank
they
you so
couldn't
much,
be worse during
BMG,
COVID for a
Chaku,
performance-based.
Daniel Taylor,
Absolutely
and
are.
Swanee.
We never actually reopened the performance space once the pandemic hit, and our space is very small. It's 250 people. So that it just wasn't safe for so long. All the touring bands canceled their tours, and because we're a small space, we really book small bands, and they're either on their way up or on their way down. That's
Let's
where
go on Instagram
So,
and find a DJ.
it's expensive to tour. Gas is up. Hotels are expensive. It's maybe not safe. Your records come
Tinder.
out, you're not selling records anymore. Everything is digital. So all of that math.
Are
has
all the guys on
changed.
Tinder still aspiring DJs?
Maybe people have gone to see their favorite band in an amphitheater. That math is totally different. So small performance venues, I mean, that's really hard. You can't really sustain that kind of business 365 days a year with local bands. You just can't do it.
Governor Jefferson has a.
Thank you so much for your presentation. I have a question around your strategy towards your workforce.
Mm-hmm.
You mentioned that you had a team in your prior business that's closed down, and now you're transitioning to a new project.
Fuck
Is
your
your
calls, you
strategy
Richie
to, try to retain
Rich
those
knockoff,
workers that
JK.
you're familiar
Thanks,
with,
DT.
such that if we're thinking about the economic impact, there's some possibility that those people might be redeployed in your context, or is what you're doing now so different that it really is the case that these are workers that were released into the economy, they have to find other
This one goes out to all the
engagements and things.
poorers who bought shitty weekly calls
It's a
on
little bit of
Hopium.
both.
Get wrecked, you
We
flight
did
animals.
retain some folks for a really long time. I mean, we've had some staff that.
Thank you,
was with us
BMG.
for 6 years, but then most of them were in the last 9 months. We offered 2 week severance to everybody, that we paid after we closed. We offered, an open door. Please come back and work with us when we reopen, we have a couple of people that we retain and going to pay through this transition. So, it would be a very different situation, and the timeline and how all of that worked would be different if I didn't know, and that most of my team could go and get another job. And in fact, I really helped place a lot of people with a new job with restaurants that I like and that I know, operate with integrity and pay their staff well and treat their staff well. If it had been a different time, we probably would have, said we're closing in 2 months, and it would have been a lot slower. But I know that most people.
I can't deal with the shine on my
very
face.
easily, but even still, we gave them.
It's like
enough
way too
time
shiny.
to find that work, be paid, and then help them find another position.
Thank you.
You're welcome.
Thanks, everyone, for all of your excellent questions. We'll move on to our third panelist, Jess Pettit. Jess is a Senior Vice President of Commercial Strategy, Insights, and Analytics at Hilton, a leading global hospitality company with a portfolio of 18 brands comprising 7,000 properties and 1.1 million rooms in 122 countries and territories. It's a pretty big role. So in your role at Hilton, Jess delivers customer performance and economic insights to Hilton's leadership teams and partners. Jess leads the only fully cross-functional global analytics team in the hospitality industry, covering brands, digital, call center, new hotel development, and other key corporate disciplines. Jess is a born and raised hotelier and has committed his career to his passion, the impact that hospitality has on society. So Jess, we'd like to hear a little bit about how this past summer has impacted your business and hotel occupancy rates compared to during the pandemic. And then where were those customers coming from? Was it for recreation, business, conferences?
First off, thanks for the opportunity to be here. It's truly a privilege, and thank you for all you all.
I love
do.
how the market rallies for like the next
It's an interesting
speaker.
economy between Chidi and I, and the large and small business. Although I'd say many of the same dynamics exist in what we're seeing from a hospitality industry perspective. And I struggle to imagine an industry that was dealt as difficult to blow during the pandemic. 80% down plus in the depths of it, and it's been a challenge, but also, I think at least on the positive side for hospitality on our end, starting to see that real recovery.
It's
And it
almost like
starts
when
with
you
leisure
leverage
travel,
zero
to
interest
your
rate
question.
debt to grow
Over the
your
course of
business
this summer, but also
or
last
over
summer,
leverage it,
our industry
and something
shifted
bad
much more
happens,
towards a
you
leisure
get
focus
fucked.
that ties very closely towards disposable income, stimulus. Folks had more money to spend on travel. So, complete opposite of 2020. The dynamic in 2021 summer and 2022 was this concept of revenge travel, right? You had not seen your families, you haven't seen your friends, you haven't been able to go to the national parks or see much of the country. And so revenge travel was a very real thing for us. And we see that dynamic in leisure markets, so consider beach markets, Southeast US. You see that dynamic in national park markets. You see it in long weekends. The holidays, we become much more compressed from a business demand perspective. And so over the course of the summer, we saw our demand from leisure travel, so when you account for all seasonality and all the other noise, up 10% versus 2019, right? And that's overall from an industry perspective, which is great. But then you realize that there's another 50 or 60% of our business, which comes from business travel and group travel, right? And in order for our industry to truly have the compression,
Here's the problem I have with
to
all
be
of this. Like,
successful for our
seriously.
independent owners,
All these
is
people
we
are
need all
bemoaning
three
cutbacks
parts of
they're
that-
going to
that,
need to make
three-legged stool to
when they
really
should have
be
been cutting
successful.
back all
So,
along.
what have we seen over the course of this summer, right? So leisure was doing very well. We started to see the initial signs.
They should have started scaling back immediately.
Starting the beginning of this year, corporate travel was down.
They should
closer to
already be,
25%.
efficient
Now, through
and
the summer, we're getting
profiting
closer to that
from this
10%.
period where growth is picking back up.
Group travel, obviously, for all
Not
the
hanging
reasons
on,
about
begging
events,
for the
all the
growth to
reasons
come
that
to
group
them.
was the most depressed from a demand perspective.
Like, these are just
we saw
poorly
that in
run
our industry,
businesses.
down roughly 35% in the beginning of the year.
Nope.
By the end of the year, we expect that full year number to be closer to 15, 16% down from an industry perspective. So you're seeing the recovery, and it's very much as we would have predicted it back in April of 2020. We built our first models, and we said the first thing that was going to be coming back was essential travel.
Well, it's a great idea. Wait till
folks that we
all
needed
the
to travel
unemployment
across the
benefits are
and
gone,
we saw leisure
and then
travel,
fire all your
small
employees.
businesses which needed to travel in order to be successful. And we saw a bit of an air pocket there.
Why are none of these business
before we
owners
saw
talking about
large
the
companies
millions
coming
in
back.
PPP loans they fraudulently
finding
got and
larger
used to
groups.
buy new cars, remodel their
I think,
houses,
the other dynamic
and go
we
on
see, and
vacation?
I often use this story from
That's
my
not
own
true.
experience.
Actually,
Weddings and events, right?
Sheedy just
we
said
went
that
from
she
no being able to
she
do that
paid
in
out
2020,
2 weeks of
get married in 2020, first in June, then in September,
2
then in
weeks
June
of
2021,
severance,
and then finally in
cut
September.
everyone she didn't like, and now she's
The
opening
dynamic
a new
you see
business.
is there's compression, right? Everybody had that same experience. So I went from a Saturday at one venue to a Sunday at another, right? And so that's a very similar sort of pattern that we've seen cutting across. Yeah. Yeah. I think maybe revenge babies as well. Which, yes, I have a 10-week-old at home now. Hopefully he's awake.
Look at this
watching.
guy with his numbers, metrics, and easy to follow narrative.
So, yeah,
but what are
we've
his
seen some of
hobbies?
those
Exactly.
dynamics from the rest of the market come back. And so it's not just been about leisure periods. As we get into September, we're seeing some signs of life in all segments. But by the end of the year, we're still going to be down overall demand for our industry around 5%. And that's when you take into account leisure up 10 and then everything else a little bit lower. And so what does that mean? I'll jump a little bit to how that impacts price, right? Because we similarly are downstream from a price perspective, right? We're impacted by labor, we're impacted by food costs, a variety of other supply chain related things. When we look at our price on a year-over-year basis, I'm sure folks see it if they're traveling, you could see prices that are up 20, 25%. On the whole, our industry forecast prices are around 15% up year over year. But when you account for inflation over a 3-year period, so comparing to 2019, our real average daily rate, we're still lagging 2019 levels. And it's really because of that lack of compression from
Seriously,
all
like,
of the market segments coming back
They've
together,
chosen
right?
businesses that are
So,
pricing
I think
forward
that's going to be the interesting thing
inflation
to
onto their
watch
customers already.
as, you
Like
know, we hopefully
restaurants,
see demand
entertainment,
reach,
booze,
levels across all customer
hospitality, like
segments,
hotel
then
rates and air
price
travel
would
rates,
follow
all going
in that
up,
way.
all pricing in inflation,
Do you think
passing it off to the
the
consumer,
pandemic experiences reshaped
and then
some of the industry
complaining that they're
contracts?
raising prices
Yeah,
as limited
so I think
growth.
a couple things that I would talk about there, and it kind of alludes also to the last question. There is a tale of two cities, right? And it's interesting because you see resort markets, drive-in destinations, they have been doing quite well. Extended stay hotels have done really well. Again, Tom's Market and
That's
other
'cause everyone
markets
got
like that,
evicted.
they've really supported extended stay travel. What we haven't seen is really the return to urban markets and large conventions. Right?
Those extended
Those
stays are
the
fucking
lifeblood
permanent.
of major cities, right? And so we're starting to see that recovery, right? But there's obviously pandemic risks and other things that folks have been considering. We need that overall return to desire of travel. And so we're starting to see that come back. And so Las Vegas and Orlando, we're starting to see that sort of turn back up. Markets like San Francisco, Chicago, New York, not as much, right? And San Francisco, obviously, much more dependent on the tech market, which has been quite, different than the rest of the overall business community. So we're seeing a little bit of that. I like to think about sort of where do we want to get back to normal versus what's going to be a new normal that we expect, right? Back to normal is return to normal segmentation. Folks are able to have their social weddings and events, get back to regular meetings, normal travel patterns, right? The students being back in school matter to us, right? Because people tend to follow the school vacation schedules. So as we see that come back to some form of normalcy, we're starting to see normal travel patterns come back. From a new normal perspective, there's a couple things, right? We're seeing the emergence of what we call workations, right? The idea that people can work from anywhere. Right? So I'm not
Workations.
sure if that's the case for you
Is that like
guys, but
Bipolar
in many
Bear living in
cases,
his
folks are
van?
saying, hey, I can not be in the office for a week. And what we used to call leisure travel, right? I had a conference in Las Vegas. I'm going to stay there for a couple days and stay over for the weekend and all that, is actually something broader, right? That we start to see some return to a new customer dynamic where they want to have a larger room and stay in a place that they can.
You're getting quite
work
angry,
during the
Daniel.
day and connected to the internet and all that good stuff. But then at night, they can do all the things they wouldn't have been able to do otherwise. Doesn't impact all customer segments. Obviously, those with families still have to follow regular school schedules. Hybrid meetings are interesting, right? I understand you guys were doing this in a remote fashion, right? We need folks to get together like this. We're not sure what the future of a meeting like this, where half the table's over television and half is in the room. That's an emerging potential trend.
Thanks, Bones.
That,
I do my best.
We're going to all have to figure out, right? Everybody's been on conference calls where it's extremely uncomfortable, where you're the one who's not in the room and everybody else is. So we've got to figure that out, but that will lead to some sort of new normal. And then the last thing I'll just call out on the sort of new normal is emphasis on digital.
It's calling out the new normal.
Right? So for us, that's folks were trying to skip the front desk, right? That there's a little bit of a different model in how you engage with people in a COVID type world, which means you want your key on your phone, whether you're flying or you're in a hotel room. So we've had a heavy emphasis on that in our business, but we're seeing that as sort of a
Boom,
change
boom,
in
meow.
dynamics,
Welcome to
which
Billionaire.
undoubtedly could
Thank you so
shift the
much.
labor model where hopefully team members are.
Happy birthday, Gherkin. Yeah.
Shout out to
We
my
might have a
homies.
chance, but we ain't got rope. Give us more than a chance, cause we ain't no coke. Get the cash in advance.
Oh yeah, I can't play the
Our
music.
industry's
That's
been
just
hit
way
dramatically
too
from a
loud.
labor perspective. We're still 400,000 jobs less
Jesus
than
Christ.
where we were from an accommodation sector. We see it
Thank
in
you
all
so
of our
much.
hotels, and when you
Boom,
think of
boom,
demand
meow.
environment
I'll play you a
where
song
on the
later.
weekends you're busy and during the week you're not, right? That's a difficult thing to labor schedule around. Right?
New
And we
normal
don't get the
market
consistency
drops.
of scheduling that our team members demand and expect. We're also seeing, the inflation of wages in our industry broadly double what is the broader wage inflation. So typically in the 12+% range, we've seen across sectors and across regions in the U.S. So we're seeing some shifts in dynamics from that perspective.
I know Governor Cook has a question.
Yeah, please.
The data that, thank you for the presentation. The data that you're presenting are for the U.S. or are they global?
U.S.
Okay.
Yeah, although we see similar trends. I mean, it's such that it interests you. We do see similar trends outside the U.S. One interesting dynamic is, take Europe as an example. It's so much more dependent on cross-border travel, right? And so obviously that was more depressed when cross-border travel was more of a challenge. Here we didn't have as much of that. But major U.S. cities.
It's going to be Tom getting on here talking about fucking potatoes that finally crashes our market.
And taste preferences?
I'm sorry?
Taste preferences, same kind of thing?
Yes.
Sort of,
Yeah,
I
generally.
mean, all
we
this
see that
sounds
as
like to me is that they're
focus on the
focusing
US from a
growth
customer perspective.
on
But yeah,
areas
we
where
see
they
those
have
sort of
to
trends.
pay
I would
employees
say obviously
less.
there are countries where it is quite different. China obviously is a different sort of customer environment, but yeah.
Vice Chair Brainerd had a question.
Yeah, I just wanted to follow up on the labor question. So, if you look at where employment is actually down relative to pre-pandemic, 1.4 million in in-person services, it's heavily in leisure and hospitality in your sector. Is that because people aren't coming back to that sector, or is it because your demand is down and so you're not demanding the same level of employees?
It's undoubtedly a mixture of all things, right? And as somebody who grew up working in hotels and is passionate about that sort of service economy that we had, it's in some ways can be less enticing of a job in a COVID type world, right? Essentially they were essential workers having to be face to face in ways that us in corporate office world we're not necessarily having to do. So I think there's an element of that which is we need sort of a mind shift back to where we were and the value in face-to-face experiences. When I think about what we're trying to do from an employment perspective,
Can we get Potato Tom
it's
trending
hard
on
to
Twitter?
get people to come back to work. So I think it's a little less of the our demand isn't requiring as many folks coming back. I mean, right now, as I said, we're close to 5%.
Jesus,
down
they're
from
letting
demand
these
perspective,
nobodies
so not
destroy the market.
massively for that level of.
I mean, better than having somebody's do it, right?
Displacement.
So
Thank
can
you.
I ask just a related question? So recently I was talking to a large firm in leisure and hospitality, and they were talking related to what Governor Brainerd just said, that their turnover rates, job turnover rates had doubled than pre-pandemic, that even when you can get workers.
I like the
you-
Dracula
is
hair
that
she's got
something
going
you're saying
on with
in
the peaks.
all these
I'm
areas?
sure we would see something very similar. We're all competing for the same subset of folks. That it's a smaller pie that we're all.
It really
competing
makes
for,
her
right? So you
forehead
see certain
pop.
places where folks are putting out big bonuses to try to convince people to come their direction, and then we have to all go back and forth. And so, the pie of workers in our industry broadly.
That's
is
Maybelline.
wide enough.
So
All right, I'm bullish on
regardless of
Revlon,
what
but
we
that's
do for
Maybelline.
demand, you're still going to have demand for labor.
Yeah, I think that's the case.
Well, Just thank you so much and congratulations. We hope you're getting some sleep. So, we appreciate you being here with us. Our fourth panelist is Kara Walton. She's a director at Harbor Results, which is based in Southfield, Michigan. Kara leads the company's manufacturing intelligence business, which collects and analyzes millions of data points from thousands of manufacturing companies in North America.
I like her.
Harbor
She doesn't look
Results
like she
collects
wants to
data
be
from More
here.
than 600 privately held small and medium-sized manufacturers each year. Kara and the team at Harbor Results utilize these data and information to help small to medium-sized manufacturers improve their competitiveness in the marketplace. Kara also studies
God,
economic,
no.
business, trade, and tariff trends.
woman's gonna come out
impacting
and
the
say
manufacturing
everything's
industry.
fucked.
And she consults with clients on their business impacts. So, Kara, thank you so much for being with us today.
Yeah, look at her. She's
Can
got
you
this
help
like
us
"fuck
understand
you"
what your
look on
most
her face.
pressing
Like, yeah,
concerns
all
are
right,
for the
bitch.
small and medium-sized manufacturing businesses that you work with?
Yeah, absolutely. First off, thank you, everyone. It's an honor to be here. I really do appreciate it. As you said, right, we work with the small and medium-sized manufacturing base. We're also a small business. We have about 15 people total on staff, so we're quite small. But beyond working with those small to medium-sized individuals, generally they're all less than $500 million. Some of them are $5 million companies in a year, and some are 700, right? But generally speaking, they're under that range. We did the math in our organization to give all of you a sense. It's about $30 billion in an annual year. That was incorrect. And it's $30 billion annually in terms of total output that they're putting out in the market. So to give you a sense of what they're looking at, They're privately held. They're not consumer facing. So they're supplying to a tier one or to an automaker or an appliance maker. And they're generally not unionized. So these are they're small and they're family owned, right? Sometimes
Why is
they're
this
second and third
bullish?
generation leaders. Our team took some time to kind of come up with an answer to this question, and we broke it into two core facets. Their biggest challenge from our perspective is labor, and we'll talk about that one a little bit. And then their second biggest challenge is the ability to make money. So if I could start with the labor piece, frankly, there are many facets to it, all of which I cannot answer here, or else we might be here for a while, as I'm sure similar to you guys. But I'll do my best to give you a high-level explanation. So the number one core challenge that our people have is that they can't find people, number one, and more specifically, they can't keep them. So in some cases, they are absolutely getting people into the door, and then they're not sticking around. This goes far beyond production workers. So I absolutely do have clients who have challenges where, frankly, sometimes Starbucks, or we're in Michigan, so the Tim Hortons or something like that will say, we'll give you a $1,000 signing bonus. We absolutely have companies who are losing employees to that, but it's also a skilled labor challenge. So we're lacking skilled labor, we're lacking people willing to even go into apprenticeship programs, and we're lacking office staff. One of the things that you guys talked about was that you don't have the ability to do work from home, nor do these people. At the end of the day, they have to make pieces and parts, so they don't have that capability similar to a tech world either. I want to be clear about one thing as we kind of talk about the labor challenge. At our core as a business,
I'm going
we
back to
focus
school to
on
be a
making sure that
machinist.
the only answer isn't adding people. We want our businesses to be efficient and to be productive.
The
But
trend
they
is
truly can't
shifting.
even find enough people to be efficient today, which is the big problem. Anecdotally, I was talking to a plastics processor this morning that hired 14 people last week. 3 of them showed up this past Monday. 1 of them left at lunch. So, and this is
That should tell you that that
person
job
who
is
says this, right?
25%
I hear these
shitty.
stories, and our team hears these stories all the time. So one of the things that we really see, right, is despite all of these businesses offering really high-paying jobs and offering career development tracks and they're paying really big bills to train these people, right? They say, hey, come in with no experience. I'll make you a tool and die maker. I'll make you a process tech or whatever it is. They're not able to even find the people willing to go in to take that level of education. And what we see happening when we look at the data is that a lot of our manufacturers
we're trading
stopped
stocks.
hiring during the Great Recession because, frankly, you guys know better than I do, their businesses were quite challenged.
We're not going to do
they
that
stopped
shit so we
hiring
run
at
out
that
of
point
money
in
to
time when a lot
lose
of
in the
millennials
markets.
were graduating out of college, and frankly, that gap is really rearing its head today. Not only do we have an average age of an owner, right? The average age of an owner is over 60. We have an average age in workforce overall. We don't have succession plans, not for key leaders or
Skill
for other
issue,
areas of
the
business, right?
conference.
So if I have a production manager who's
I'm just going to
in his
start
late 60s
applying
and
as
says, hey, you know, I
CEO
wanna
for
retire
different
in the next 4
businesses.
years, there's
Till
no
one of them
there
snaps
that's
me
even
up.
considering being the next person to be that production manager. You lose a production manager, your facility doesn't run. So beyond that, right, what we're really watching in our bottom line is that it's costing these guys a lot of money. And what they're starting to tell us and what the data is starting to show us is they're choosing not to grow their businesses, which is a big challenge, right? So they're saying, hey, I'm not going to take on more revenue because I don't have the people to do the work. Or in some cases, they're even saying, I'm going to shrink my business, which brings me to my second point, their other biggest challenge, which is they can't make money at the rate that they used to be.
Jpow has spoken.
You said there's a lot of compounding issues and everything. There's a lot of compounding issues in this one as well. But some of the core pieces of it that we're seeing is that despite these businesses increasing their
Will you
efficiency
hire
level,
me?
so they're absolutely
Sure,
doing
it's not my
better
money.
from an efficiency and throughput perspective, they're not making more money. So when we look at their actual profit,
As long as I get a
margins, they're not
nice
going
golden
up. They're
parachute, I'll
frankly
hire
going
all of
down
you sons
quite
of bitches.
substantially. It's due to a lot of different reasons. One of them is the labor piece, which we talked about, so I won't go into too much more detail there. The other piece is this overall cost of doing business. So it's everything from energy prices, it's transportation costs. The rail strike was a really big, or potential rail strike, was a very big challenge to these individuals. Healthcare costs, and everything from temp agency upcharges, right? So
All right, we got jobs. Wait, no, I have to get the job as CEO first.
Interest rates on loans is a big one. Most of these companies do not have cash. They're privately held, but they all use lines of credit. So that's really impacting.
Then we'll
them as
use
well.
our democratic power
The
to
other piece that's
overtake the
preventing them from
company.
being able to make money at least consistently.
Let's see if like
They had a
all
lot of PPP
1,200
or
of us
ERC
can
funding,
infiltrate
kind of like
Microsoft
business.
and take it
Most
over.
of them did get that because they are privately held and small. Some of them used it better than others, right? Some of them used it as a lifeline and frankly just delayed some of
Like
the
an
challenges they were
infestation.
feeling before COVID even took its toll. And now that that money's dried up, they're feeling those same challenges again. My final piece on kind of their challenges from a financial perspective, which
It's
is
a different
potentially
kind
the
of
most
hostile
challenging to
takeover,
quantify. I
right?
did my
It's
best
like a
to put it
ground
into
level
numbers.
hostile
This
takeover
increased
for the
chaos that
people.
they felt over the last 24 months is really preventing them from being able to make money.
We'll
So
be the
best
only
way I can kind of
applicants.
articulate that to you is that most of the customers and companies that I work with don't know their customer demand. They don't know the schedule on their shop floor. They frankly don't even know who's going to show up to work in a given week, and in some cases in a given day. I mean, there were periods of time in 2020 where we would talk with customers who would say,
Yeah, of course we buy
I
puts
got
first.
into work today and 8 things changed between 7 and 8 a.m. Right? So they don't know how to do this.
Oh my
At
God.
the end of the day, what that's doing is that's driving up massive amounts of transactional waste. It costs a lot of money to hire someone, even if they never show up. Still costs
You
money
know,
to
she's
get
saying a
them,
lot of things about
process them,
like
and give them healthcare and all of that.
that she does like
Additionally, it's tying up a lot of
manufacturing
inventory, so we've seen
intelligence.
massive shifts in inventory right now. And the final thing is that it's
But
really
it sounds
costing them way
like
more cash than
workforce.
they ever did before. So
Like
their
she's like a
ability to
labor
have any
provider.
flexibility in terms of how they spend their money and how they make money is gone. And at the end of the day, right, this is a massive group of people. They're not all the same, but the viability of many of these businesses long term is really concerning to us.
Those are very difficult challenges.
Yeah, or like a temp agency.
Could you give us some perspective on how supply chain issues are continuing to impact your business?
Yeah, absolutely. So I will flip to the final page of the notes.
After you take control of Microsoft,
from more
the
of a
first thing
supply
I
chain
suggest we do
perspective,
is rename
we
the
are based in
company
Southfield and
as
different machines, so we
PickleSoft,
do work a
pure
lot in the
value
automotive
ad
space,
play.
but we also work
Nice.
with others. I personally came out of the appliance arena, so we work across most of them. A lot of the challenges today seem to be around semiconductors. That's a big thing that seems to get picked up a lot in the press. It is absolutely an issue. I'm not going to belittle it. But there are a lot more problems than
She's
just
getting
semiconductors.
very emotional about
To speak
this
on the
too.
semiconductor one just for a second, some of the core challenges that we're seeing is not only does automotive need semiconductors, but your
Nervous?
refrigerator
Yeah,
needs
maybe.
semiconductors. There was like a new PlayStation that came out last year, and that needs semiconductors. A lot of people talked about it. PlayStation and Xbox are confusing to me, but either way. So that was demanding microchips.
God, they're all
of these
smiling
different
at her,
things.
like,
So automotive companies
relax
can't get
the
them,
environment.
which means that this whole demand problem that our customers are facing, they have no way to plan when they're going to get chips in order to put them into the parts that they're ultimately supplying. The other piece on the semiconductors, just real quick, is that when you think about an electric vehicle coming into play, they require at least 30% more, sometimes even more than that, than an internal combustion engine does. So if we adopt more electric vehicles, we're demanding.
They're trying to cheer her up. They look creepy as hell. They're all like,
But beyond the semiconductor challenges,
The fuck is
probably some of the more concerning things to me and maybe less easier to solve challenges from a supply chain perspective are centered around things like transportation and freight, which all of you talked about in different arenas. But a lot of that applies to things much more than automotive as well, right? So you talked about the agriculture.
At least
business. We work
Jpow's
with
sitting there
companies who
looking like
get
everything's
washers and
fucked.
bolts to make trailers to hitch on the back of their F-150s to get whatever they need to get, wherever they need to get it, right?
What's
The
that, Matt
other big
Kors?
supply chain challenge that
Quanex?
we don't really see a light at the end of the tunnel for is natural disasters. You talked about it from an agriculture perspective.
Why would
There's
you want to
lot
buy
of
a
impact
stable
to that on the
coin?
resin and steel
Just keep your money in
markets
a
as
bank
well.
account or buy a bond.
The resin market specifically, there are certain types of resin that ultimately allow you to make your dashboard.
Oh,
or
that's what I
make
love.
the-
Stocks that don't
some
ever
of the
change
plastic that
valuation.
we probably have in this room right now. The capability for them to get that resin even before
Is this the real Matt
the
Kors?
most recent round of natural
Someone double
disasters
check
occurred,
this.
some of the major freezes that happened last year, it was already in force majeure. So these companies were already taking the time to go, we need this because it's a crisis, and then it got worse, right? And that had nothing to do with any of the port challenges or any of the difficulty getting a bolt out of China or somewhere else. So that was one of the big pieces on the supply chain front. I guess to bottom line it for you guys, at least if I could, in terms of what we're seeing from the supply chain piece of it, automotive specifically historically has been a 17 million a year sales volume in the US. This year we're forecasted to do about 14 million units. If you look at the OEMs, which
Contest
are publicly
winner for
traded
missed
companies owned by
forehead. I didn't know the
customers,
Fed had its
they're
own
making
laugh
money and
track.
they're doing quite well. They have their challenges, as do all businesses.
It
They
does.
don't necessarily have a reason to go back up.
I'm gonna go with that one guy. His forehead was
The reason
like
why I
a
bring that up is
like a
because
skateboard ramp.
this means that we have a lot of people who are supplying to them who are dealing with a much higher.
It didn't even
mix
have a
because
forward
everyone
part.
wants something different in their car
It was just
today or
like
different in
a
their appliance,
it's a head.
and we're dealing with a much lower volume. So at the end of the day, what that does is that
There's
increases
nothing on the front.
complexity
No,
for
it's not a
everybody that we
5-head.
work with.
Like there was
And
no.
then within that, what that does is that makes
like a
them really
car with no
challenged to manage all
windshield.
of the supply chain pieces that we talked about And at the end of the day, they're focused on this week, am I going to run out of cash or am I going to shut down my supplier's line, right? So, I mean, these are the kinds of decisions that these companies are facing.
I can't
know if
tell
that
if
fully
she's
answers it, but
nervous
that's
or just
where we're
really
at.
fucking emotionally attached to these businesses
Yes,
she
I'm just curious
represents.
If these firms, it sounds like some of them have more demand than they can handle. So if there's a downturn in the economy, how are they going to manage it?
They're going to fire
so
people.
They absolutely have more demand that they can handle. From an inventory perspective, we're still well below it. We saw demand on average for them go up nearly 30% between 2020 and 2021. It's plateaued a little bit, but it's still relatively high.
Maybe she
In terms
watches
of
the
that
stream
demand
and she
lowering,
knows what's
I
going
think
on.
some of them would be, I'm not going to say pleased, but would be relieved by that. Because the intention of that demand lowering would mean, hey, maybe a couple of my 20, 30, 40 open positions I no longer need to hire for. Maybe I can take a breath to actually manage my business and focus on continuous improvement. Obviously, we don't want demand to shrink too terribly much. But what I will tell you,
shouldn't have
at least
eaten
in
that
automotive
extra bowl
specifically, is
of
there's pretty
Brussels
hefty
sprouts
demand
before the
demand.
meeting. He does
From a-
kind of look like
from
he's holding in
tooling
a
and new
fart.
product perspective, so we have a lot of new vehicles coming out in the market in the next couple of years. It's really positive, so we absolutely have the demand to do so. The challenge is if they're able to run their businesses to still make money, even when the demand is still there. Does that help
Definitely
answer?
nerves. No, I'm going with deep emotional attachment to
Two
her
questions
clients.
about the
She's
long
someone
run.
who cares.
In my previous life, I was a professor at Michigan State, so had students from Michigan. And in my senior seminar on the current state of the economy, and I taught it for about 15 years or so, the last time I taught it was 2019. And the question that I posed at the beginning of the semester is, do you think you're better off than your parents were at this age?
Fuck no.
And for the first time in 2019, students said, post-Great Recession, they said that they thought that they were better off because they had interesting jobs that their parents had to work on the line, and that they thought these were boring jobs. So, people don't want to show up for tool and die jobs. My students' reaction would be, that's boring, that's not the Apple Store. So, that seems long-term. That seems structural. So how do you address that? I mean, how do you?
She's not wrong. I fucking love my job.
Say that they would address something like that.
Yeah.
How do you make manufacturing sexy?
Yeah, that's the end-all question that we face almost every day with our businesses. It's very challenging to make manufacturing sexy, I'll tell you that. I would tell you that if you go into the average manufacturing facility, there are floors that I would eat off of. I mean, there are impeccable facilities in this country. They're beautifully maintained. Everything from, yes, OEMs and tier ones, very large companies.
Don't do that.
Do a great job. But I walk into $10 million plants that are beautiful, have state-of-the-art equipment. You've got 20-somethings working on $1 million machines and coding that never got a 4-year degree but went to an apprenticeship program and are doing really cool stuff. The biggest challenge we have
Is she trying to sell people on
encouraging more people to
manufacturing
do
jobs
that.
right now?
The only way that we found success so far, at least our clients have, is they've focused on actually talking to the parents at very young ages. So
She just said
starting in,
manufacturing was
elementary and middle
not
school, about
sexy.
the benefits and the
And
career
I,
development opportunities
I would
in
say
manufacturing
that
that don't require
Chakuseki's
a 4-year
tour
degree.
of the
I have a 4-year
Fleshlight
degree. I know
Factory
many people here have a
was
lot more
very
than one 4-year
titillating.
degree, so I understand the benefits of higher education, but it doesn't mean that everyone needs it. So we're focused very strong on trying to encourage people to go into manufacturing because I'm a nerd for it, but it's really cool.
Okay. So I have just a quick question, and this is a longer term question too. So to what extent, because of these labor demand challenges, to what extent have businesses adopted automation to fill the labor demand?
Yeah, they absolutely focus on automation.
No,
pretty clearly
I wouldn't
all the
eat off
time.
that
I was
floor.
at,
It's not
we
my
spoke about
type.
big conferences. I was at the International Manufacturing Technology Show in Chicago a couple weeks ago. Actually, very well attended, so that was positive. I stayed at a Marriott. I'm sorry about that.
The market's just getting punked
But
on her
either way,
passion
we were
for
at that show,
manufacturing.
and the core
I
focus
told you
was
guys,
automation. So it's
emotionally
everything from
connected to the
automation
businesses
within
she
the machines
represents.
themselves. So if you're cutting a piece of steel,
Now that she's
they're really
getting into her
focused on how do I have
flow, look at her
multiple
go.
pellets to make sure that I can do things.
That's all it takes.
Without people, right? How can I run this?
All you have to
machine
do
for
is talk about
24
something you
hours
care about.
and then have some guy sitting at home on his cell phone being able to monitor it? Because they have that technology today. Every machine monitoring company will give you an app on your phone. So they're focused quite a bit on
Oh,
that.
so they
piece
can
of it.
track you.
There's also a lot of automation in
Awesome.
terms of
That's super
listing and
cool.
material
I love it when
handling,
my employer
and
knows
even
where I
in
am
terms
at
of
all
the warehousing
times.
pieces of it as well. So how do I get a machine to wrap a box, and how do I get, frankly, any automation to do what even in manufacturing we may call the less intriguing jobs, so that we can have people actually making parts and actually designing and actually checking quality and doing the things that are, what I'll say, more fun than packaging a box of parts, right?
You
We
don't
have,
move
at this point,
from
automation.
box packer to senior engineer
Quick question.
on the job.
Chris and I are kind of going in the same direction on these questions, and I'll ask it to you, but anybody else can jump in. So in a normal economy, if demand softens a lot, first thing businesses
No, you fucking don't.
they often will lay off workers. This seems like an unusual economy where businesses have been scrambling to get workers for so long. If demand softens, do you think they would respond differently this time in terms of those workforce?
It's like if you pack this box long
do
enough.
the kind of usual
Not a
playbook in
sexual
terms of
reference.
Shrink costs.
Right, yeah.
You too can
it
learn
really
advanced
depends on the
mathematics
business
and
of it.
CAD
Obviously,
design.
everyone's different, and I don't know all of them, but I do think they would approach it differently. I think one of the things that, at least in our space, they may consider doing is looking more closely at who is it that may actually be close to retirement age anyway, that we could help them, and now they maybe feel comfort to be able to leave the workforce. And then how do we get that tribal knowledge out of that individual before they leave, right? The big thing with our workforce is going to be that the people who may necessarily want to leave the workforce at some point in time, they have
Just
all of
call the
knowledge on how
Fleshlight
to do
Factory, see if
everything,
they're hiring.
every average good that we see in this country, right? There's some guy sitting in an office that's a tool maker that knows exactly how to manufacture that part. I don't
Be
think
the
they would do
change you
massive
wanna
rounds
see
of
in the
layoffs,
world.
but I do think they would potentially strategically say, hey, frankly, let's rank our A, B, and C players, right? Who adds the most value in our business, and who are we?
Hey man,
hiring
that's
because
4
we need
hours
to
of
be desperate
overtime,
for
right?
people in this massive
Stefan.
demand surge, and they may choose to let go of some of those individuals. But that would always, for them, be non-skilled labor.
I was
can't see
an
any
engineer
sort
for
of potential to
GE
get rid of
in
skilled
another
labor.
life and had to work with
And
line
would
workers.
probably not be
They
a
are
critical asset to the
peons
workforce.
and would never
At least in
become
the
an
privately held
engineer.
businesses I
There
work with.
simply
I
is
can't
no
speak as much for the
path.
publicly traded guys.
Thank you for your assessment,
everyone.
Jfresh.
Thank you so much to all of our first panel and our panelists, Tom, Chidi, Jess, Kara. All the information that you've provided and shared with us today really just helps us better understand the data that we look at here at the Federal Reserve. So now we'll take a quick break. We'll come back in about 10 minutes, and Vice Chair Brainerd will chair our second panel. So thanks, everyone.
Thank you.
But we've got more people coming. That was exciting. I can't wait for the second half, the conclusion of like the finale. I'm really excited. I have Jamie up on 2 screens right now, but I'll fix that. Today turned out to be a more fun stream than I thought it would be. Oh, we're going straight down on the 10-minute break. Jpow looked like he's getting a colonoscopy tomorrow and is like full of barium. Like he's gonna go blow a gasket in the fucking Fed's bathroom right now. He didn't say a fucking word. He was just like the whole fucking time. They should add some commercials on the break to help offset the national deficit. No problem, man. I got you. There you go. Anything for my viewers. He can't stand to be among the poorest. He's like a pigeon well trying not to smell the rancid masses. Yeah, Jimmy's still under $25. Relax. Casket is a weird name for an intern. Nice. You just hit me with an ad. You must be part of the 3% that aren't watching the stream with ad block turned on. Jimmy up like 4 cents. Is this MOASS? I love how, the move from 24.30 to 24.70 was all it took to make you guys bullish. If I'd known that, I just would have bought enough stock not to listen to you all bitch all week. What do you say, Cat and AMD currently at good entry points for long-term holding investment? Long-term holder investment, or would you wait till next week to see what happens? I think Caterpillar is at a very reasonable price for a long-term hold. Obviously, I would plan to DCA over like a couple quarters, but very good range to buy it in. AMD, I think we'll see lower ranges into the end of this year and more likely the beginning of next. I bought some AMD recently, but I only brought my cost basis up to like 46, 45, I think. I probably wouldn't buy a lot of AMD additionally to that above 45. So if it falls below 45, I'll average up some more, but or I'll average down some more. But that's kind of my cutoff. Did you try to make up the fact that you didn't have enough puts by running an ad? Oh, come on. Don't act like you don't have ad block. Can you talk about manufacturing? I'd fucking love to. Thoughts on Upstart for the day? Looks like a pile of shit. It's basically traded on VWAP for the last 6.5 hours. Bold of you to assume I care about getting ad block. I just wait the 5 seconds like a bot and click skip. That works too. Are you gonna roll your Upstart CSPs? Probably, yeah. I'm gonna roll them down and out. That's not if Jimmy breaks 24.90 before end of day. It's at 24.90. No, it's not. It's not MOASS. It's just ass. I'll tell you what it does look like, though. It looks like I'll be waiting till Monday to sell my covered calls. Holy shit, we might make it all the way to 28.75, guys. Wait, are they back? No, they're not back yet. When your power goes out, I actually have to work. That sounds super shitty. I'm sorry that you've been put through that. Hurricane hitting New York? Awesome. That's super great. That'll be really good for the uptime of this stream. Are these meetings just pageantry? Yes. Absolutely. Do puts cost same like shares? Cash. Yeah. You could use margin too. You could use someone else's cash to buy your puts or shares. Rolling out your October 31st or Upstart after next week. I'll roll them out to November. I'm not going to roll them up, just out. Kirk bought more GME, that's why it's running. I would never buy GameStop at $24. How dare you? Because if Ivy's going to tick up on GME and the market's going to ramp up, I'm going to wait to sell covered calls instead of selling them at 26 and then having to buy them back Monday morning on a fucking pop in the market. I'm not tanned. I drove through New Jersey with one of my windows down and the spray tan got all over me. Rookie move. I know. I know. Why you gotta hate on Jersey, man? Because it sucks. Are you holding your GME calls until Monday? Sure, why not? Hey, Upstart's doing a thing. Oh my god, everything's ripping. My calls. Haha! Fuck you, Bears! For transparency, like 30 minutes ago, I was still holding puts, but they're gone now. Full bull. I capitulated before the rest of the puts. It feels good when you front run JPM. I've come to collect my I told you so's. It's okay. Nice, Swing Trader to Mars. Congratulations, dude. From what date are the FTDs on Upstart today? 9/2. We're gonna do it. Let's fill the upside gap. Where is it? There it is. Look at this thing. It's huge. I don't think there's enough time. I finally have enough shares of Fubo to start selling CCs. Let's go. Nice, man. Congratulations. Oh shit, they're back. No one even told me.
In 6 Central Florida counties. Derek previously led the Central Texas Food Bank in Austin, and he's held senior leadership positions at the American Red Cross and companies such as IBM, Pervasive Software, and Dell. So, Derek, welcome. We're really glad that you could be here with us. I do want to just hone in on this issue of food security and just ask you how high inflation, particularly in food, is affecting the communities you serve and your organization's ability to serve them.
Thank you. First of all, thank you for.
I love this dog and pony show. Everyone, oopsie, I did a bad business, Fed Daddy. Don't rate hang me no more. Ooh. Cue Fed laugh track. Also, line workers and techs can only dream of having the title of engineer. Rancid pours. Disgusting. Agreed.
We've all had a couple of difficult years, and so have those we served. And we were all ready to believe that post-pandemic life was going to be back to
Is that guy wearing a Patek Philippe?
But as it turns out, for those who experience hunger or are concerned about
Where's
hunger,
my watch
that's
experts?
not necessarily.
What's that on his wrist?
Second Harvest Food Bank of Central Florida is one of a couple of hundred food banks that make up the Feeding America network across the country. Also one of 14 food banks that span across the state of Florida.
It's a Casio.
And while my story or our story in many cases is
I know about the
central to
hands.
Central Florida, around 65 to 70% of my peer CEOs and executive directors across the country would sit here and tell a very similar story. During the pandemic, we had a strong national response. We had strong government response. We had strong charity responses. And we couldn't be more excited about that. But that enhanced support with unemployment
about
assistance,
Jimmy at
stimulus
24.
checks, child
Do you
care,
think I'm a dum-dum?
assistance, homeowner
No.
assistance.
That's not
is
great, but it's not the
wonderful, but
worst.
Now that we've combined it with inflation, that means that the problems are cropping up.
Movado?
What's different this time is that the level of support that we received.
I don't know what a Movado has on it.
Feeding America itself estimates there are probably during the pandemic around 53 million Americans across the country who weren't really sure where their next meal's coming from. Let's wrap our heads around that number. That's a lot of people. It's a lot of children. 1 in 5 of our babies don't know where their next meal is coming from.
They're fucking babies.
In Central Florida, we estimate around 500,000 are food insecure and aren't really sure where their next meal is coming from. And most of those individuals are suffering from a recovery period.
Well, now he's covering the watch, which makes me think it's expensive.
Around the fact that most of Americans only had around $400 set aside for a rainy day. So think of that rainy day fund pre-pandemic. Think of that rainy day period through unemployment and the challenges that we saw during the pandemic. Think of how long it'll take to recover when you've
as a
lost your
baby.
job,
Did
or
I
someone
wonder
in the
where my
family
next
has
meal
lost
was
a
coming
job.
from?
And that
That's the
basically
parents'
brings us to
responsibility
today.
and worry.
In Central Florida, before the pandemic, we were distributing around 150,000 meals a day. During the pandemic, that number went up to 300,000 meals a day.
It'd be fucking amazing
And
if he was
today
wearing a
we're leveling
Tamagotchi on
off
his
at around
wrist.
250,000 meals a day. Now, let me add a little additional context to that. In 2019, around January, a gallon of milk was around $2.90. Today, it's over $4. Now, if I'm someone who was
Every
struggling
baby
with
I've
food
ever met
insecurity
knows that
at
those
the
yum yums come straight from the
$2.90
boobie.
mark, the likelihood of my being able to
Okay,
recover
that's
from
fair.
that today is somewhat slim. And I don't know about you, but very
Wouldn't you get
rarely
your
do I
watch
go
out of your
back to the
safety
grocery
deposit
store and see
box
those prices
if you were going to
return
meet
back to where they
Jpow?
were 2
No.
years ago.
I would dress as I
So
am.
we hear so
I wouldn't
many
lie to him.
stories from our clients. We distribute
I only
our
do that
food
for
through
weddings
a
and
group of about
funerals.
500 partner agencies. These are soup kitchens, food pantries, and the like. Some of them specialize in focusing on seniors. Some of
Have
them
you thought about
focus-
just trying to
focus
send
on,
everyone HelloFresh?
providing food for those who are
Guys,
experiencing
let's take a second to
homelessness.
talk about
And we're hearing a
HelloFresh.
variety of different kinds of stories.
You too
They
can have
range
prepackaged
from,
shit
"I'm having to sell my
delivered
food stamps in
slightly
order to get my
thawed
rent paid."
to your door
That's
once a
typical.
week.
From, the script has flipped. First there
That's
was a
it.
shutdown and lack of income and funds. Now 2 years later, we're paying back everything and it's hurting more than ever before. $40,000 or $50,000 used to really matter, and now making $40,000 to $50,000.
No, that was the whole pitch.
Central Florida. That's what we're looking at today, and I'm going to probably answer both of your questions that I have with this, if you don't mind. Something that we like to say frequently, and I might have been faced this myself when I first started, is the face of hunger really isn't what we think. We automatically default to this.
Does Janet Yellen have her own San Pellegrino?
You're unemployed, or you just don't want to work. When a significant portion of those that depend on our services daily
There's fucking water in the
are
jugs.
working families, some of them working multiple jobs. And they range from seniors, they range from who were on a fixed income.
Carly's talking about food
or now
pantries.
that
I might need to
pandemic
use
has
them if the
passed and we're
spy keeps
seeing
tanking.
heightened inflation, that they may be taking care of one of
How would
their
you
own
dress
kids
if you were
or
getting
taking
married
care
to
of their
Jpow?
grandchildren. So it's that same fixed income, but the cost is even more.
Am I the
in
wife
addition
or
to
the
that, just the normal
groom or
family
bride?
events, we're seeing families bring in other families and families combining themselves just so they can make ends meet, and particularly when we're talking about the
That's
rising cost
Tito's
of
and
housing
soda.
that we continue to see. So
I don't know, but I
that's
really
what
want
our
a table this
clients are seeing,
size.
are those who depend
This
on
stream
us
would
are
be
seeing,
epic if I was like
day
30
in
feet
and
away
day
from the
out.
camera.
But
At a
those
giant
challenges,
table covered in
our
screens
food
of
banks
stocks.
are not immune to those challenges either. We're still businesses running day in and day out trying to provide these services. And we are seeing challenges from a food sourcing perspective. Tom and I were talking outside when we mentioned the
fucking
drought that's
Tom.
taking place. We source a significant amount of food from farmers. And if that food isn't there, then we're going to have problems sourcing it. We typically we get food, or most food banks get food in three ways primarily. There's the food that is donated to us throughout the retail, from the retail channels. There's food that's provided to us from the government, from the USDA. And then there's the food that we purchase. On the average second harvest of Central Florida, we would spend around $2.5 million on an annualized basis pre-pandemic. This past July, we had already spent $6 million. So that's then 25% increase in transportation costs. We put 22 trucks on the road every single morning. That's the cost.
Sir David P., stop engulfing the candles, okay? That's not polite.
And that's also with the increased demand that we're seeing for that food as well. So those are some of the issues that we're starting to see day in and day out. In short, but this is very to the point, we don't see anything ending anytime soon. In fact, we're about to go into the holiday season, and every single one of us in the room probably associates food and family with the holiday season.
Okay,
But there'll be millions.
can we
of
take a
Americans
second and
who
just
won't
talk
be
about
able to
how
do that.
the
Millions of
SPY
children who
still
will not
ripping
be able to do that
after the last
based
3
on
minutes
the economic
is
situation that we're seeing today, because
means
so
the
many
SPY's
of them
racist?
simply have not.
Like, look what the SPY did when Tom was talking.
And again,
Rich old
thank
white
you
man.
again for the opportunity to just bring
This guy's like, hey, there's
issue
no
to the
food
surface
anywhere.
on behalf of
Everyone's
myself,
starving.
as well as
SPY
the
to the moon.
99 peers across the country.
Let me ask my colleagues if they have questions.
Tom's like, I had a hard time finding
So I'm
a
still
fucking
struggling a
potato
little bit
last
because
week.
it's hot
Might be
stock
out of
market.
potatoes. SPY
Wages have grown
tanks.
a lot, and food security is really fragile, and it sounds like no relief in sight. So how do I reconcile those things?
I'm not entirely sure how you reconcile those things, Governor. We're asking ourselves the same question. When the need increases, we've been able to scale so far. Again, the challenge is simply around those that we provide services to are struggling to.
Tom's the
recover.
potatoes jacket.
We're also seeing the demographics change a bit as well. We used to automatically associate hunger with low income. We're starting to see middle class be a part of that as well.
You
whether
clip
it's
it.
based on the long
I
recovery
don't have time to
period,
clip things.
because of the pandemic, or it's just simply challenges that they're seeing. 40% of we've seen a 40% increase in people who are seeking out our services for the first time. I wish I could hear some of those stories. I never ever thought I would be here. We were doing fine a couple of years ago, and now we are literally struggling to make ends meet. Whatever little money we have runs out around the third week of the month. And
Pay
thank
yourselves
goodness we have
less.
food banks that we can depend on. But there's only so much that even we can do, because the gap really didn't narrow from what we are distributing on a daily basis. We're not seeing that gap today, Governor. In fact, we're seeing that number increase.
Can I ask you more? This is just kind of a data question. So of all the people you serve.
Oh my God,
what
I don't think
fraction
that's
would you
Janet
say
Yellen.
Elderly, retired, working, poor, non-working.
I just saw an old white lady
We
that looked
are
like a
not
blueberry,
capturing
but
significant-
it wasn't
I have to
Janet
give you-
Yellen.
I can give you dated information.
It's someone else.
We don't have that information as of today.
Oh.
I apologize.
But what we would typically see is, let's go back to those experiencing homelessness. That was a less than 10%.
Your WeBull's frozen.
What we saw with those that were working, that was in the high 60 percentile range, pushing 70%, working at least one job, and in so many cases even more than that. So those are the numbers that we're starting to see. We'll get new data probably toward the end of this year, but based on the fact that we're still 40 to 60% higher than we were pre-pandemic, the likelihood of those numbers changing very radically is pretty slim.
Yeah, so I guess this goes back to Governor Brainer's question. You have people who are working, they're in a hot labor market, but they're not earning enough to even have food security.
Absolutely. That is the challenge that we're seeing.
Can I just ask
You know,
if you've spent, or if you're
There's a food bank around the
$6
corner
million
from my house.
by July.
It's a
how do
lot
you
closer
expect to
than the
be able to
grocery store.
continue to provide the same level of service throughout the rest of this year and then into next year? How are you thinking about how you'll be able to continue providing
That
this
evil?
vital service to these people in need?
That's a good question, Governor. Thank you. We were very fortunate.
Wonder if they have
during the
eggs.
pandemic, the community rolled out in ways that were unimaginable. But now is the time that we're spending down on.
Donate money to them.
those
I was going to
dollars.
go get food.
We expect at the current rate, we expect that to last maybe about another couple of years max. However, we don't see the need decreasing. We don't see the need decreasing next year, nor do we see the need decreasing into 2024. We're hoping toward the end of 2024, we may start to see things level off a bit.
Your funding comes mostly from government, mostly from private donations, from long-term foundations, or
Does the
where
food bank have any
come from?
potatoes?
From a
If
Central
they
Florida
do, they're
perspective,
mine.
The majority of our donations come from individuals, which is very comforting. Around over 60% comes from individuals. So
I figured out the
we're
car you
hoping
drive.
that
It's the one
that
Cruella
will
de Vil
continue,
drives
even though it's starting
in
to
101
decline, not a steep
Dalmatians.
decline. But I think a significant portion of that is
They don't
the
have
thought
grass-fed
process
free-range
that,
eggs.
or
That's
the
bullshit.
misconception that this thing is over, and it's not.
All right. Well, thanks,
you.
Derek. We're going to move next to Dr. Brenda Hellier. Brenda is the 5th Chancellor of San Jacinto College, which is the 8th largest community college in Texas and a national top 5 community college as recognized by the Aspen Institute. Before becoming Chancellor in 2000,
That's a lot of awards
Brenda
for a
served
fucking
in a variety
community
of roles,
college.
including Executive Vice Chancellor.
We're really
Vice
trying to pump
Chancellor
that
for Fiscal
place.
Affairs,
I wonder what their
and Executive Vice
admission numbers
President
look
for
like.
Resource Development, and previously was in the corporate world and a small business owner. So Brenda, thank you so
8th
much for
best
being with
community
us.
college in
It'd be
Texas.
great to hear a little bit about what jobs you are preparing your
Fuck.
students for, whether those jobs and skills have shifted in this
8th largest? Sorry.
economy, and as a result, whether you've made changes to your educational offerings to help prepare your students for the job market that we're seeing today.
Thank you, and thank you for having me here today. I'm absolutely delighted. So San Jacinto College is in the Gulf Coast region. We're outside of Houston. We have this fall about 31,000 students. We are down about 2,000 students, or 6% since fall of 19, which is our prior pre-COVID numbers. We serve about 65% of our students are Hispanic, about 10% are Black, and our white population is declining about 17% right now. 42% of our students are first generation to college, and if I look by demographics, about 48% of our Hispanic students are first generation to college. Our high schools, or our school districts in the area, they are about 75% on free and reduced lunch, and so pretty high economic needs there. From a standpoint of breakdown males to females, we lost a lot of males during the COVID from that enrollment standpoint. Our males had been at 41% through COVID, then they were down to 38% of our enrollment. It was almost all the decline were in our male students. We are back on a percentage right now. Where we are seeing a decline still is with our Black males coming back to school and really reaching out into them. When our enrollment, when I look at the pieces of it, our first time in college students are kind of flat right now. We had lost quite a few from those May 2020 graduates. They didn't go anywhere. When we can see that the college going rate in our community was 52% before COVID, those May 2020 graduates, it was only 45%. So I'm really concerned. Where
Holy
are they?
fuck.
How do we bring them back? We've seen increases in first-time and college students since then, but we've also seen a decline in our over 25-year-old students. And so
This is
that's
the
an area
opportunity
that we're really
women and the
continuing to
disenfranchised
what's going
seize
on.
it.
So of our offerings, about 35% are directly tied to workforce training.
They all trade
So getting
stocks now.
into the jobs. We're in the heart of petrochemical. We're in the heart of maritime, aerospace, and then the health sciences.
They
And
all
so
sell
those
Tesla
are major
weeklies
jobs
now.
We're training for. And we're very lucky for the relationships we have in our community. And when I say that, in petrochem, there's 133 petrochem.
No, we're using this
companies in
woman's
our region.
assessment
And
of her
so, these
local
are
community
great
college that she
community
runs
One of our graduates
as
will
a
come
as
out
a
and
national
it's 5,000
demographic
this
indicator.
year, and that's with an associate degree. The other thing that was really important is
Spy
before COVID,
bearish on
before the
college,
pandemic, we had very
bullish
strong
on starving
relationships
people.
with industry. All community colleges
The spy,
have
the
advisory committees made
SPX
up of
heard
industry
that
people
white
serve
males
on
have
them
stopped
working on
attending
curriculum.
college
We also
and
at my
immediately
college have
dropped
an
10
advisory
points.
Council. It's a chancellor's advisory council, and it's C-suite. I mean, it's our plant managers, our VPs, and our CEOs meeting with me and members of my team, and we're really focused strategically on workforce needs.
Posty, what was that?
So with petrochemical,
That woman needs some help from Revlon and their fantastic
before
line
COVID,
of
we had
cosmetic
opened a $60
products.
million
Where's
new
Dr.
training
Perelman
facility.
when you need him?
And it was
I don't know,
a
she's got like a
facility, if you
style
talk
going
to
on.
Industry, they'll say this is a facility designed by industry for industry. It is a day in the life of an operator. It takes students all the way through what really is going to happen out at a plant. Even to a point, their last semester with us, they're doing shift work. They're doing 24-hour shift work, 8-hour shifts, so that they can
I'm
climb
also
the
a white
stack.
male, and I can
It's a
say
two-story,
I'm not attending
8,000 square foot training
community
facility, but
college
they're doing
either.
it just like they would at a plant. And it was a
She has a
total
good neck.
redesign of
Well,
curriculum.
that's a weird
Industry
compliment.
wanted to rebrand in our community because you had asked the question, Governor Cook, about people living in these areas, that these jobs weren't sexy to them. It's what
There's
happens
no
happened
way
with
you're
Reeves. We
white.
didn't have a
Why would I say I am
and
if I'm
so,
not?
We really worked with industry to redesign how we trained and how we recruited together, going into high schools, going into 8th grade, and trying to build. These are the jobs. And they're not the jobs that you had, your parents had, where it didn't take a credential. So that's been important work. We've
Still
done the same
white.
thing with Maritime.
Darker white.
We're the
God, you
number
guys
one
are
for
fucking
the country.
racist.
And I heard all the logistics problems. That's exactly what we were trying to train for. Deckhands, towboat operators, tug operators, and so again, a program designed by industry, U.S. Coast Guard approved courses. We're right there on the ship channel. People didn't even know about these jobs.
He's trying to get in
So
on
the
the
demand
whiteness.
is definitely there. How it's changed is through COVID, our partners
I'm
were
not
nervous
fucking
that we weren't
Greek.
doing the technical hands-on training because there was so much remote.
I'm
And so we
Italian.
made it really clear how we were doing hybrid. A lot of the lecture piece
I don't know how much
will be
history you've read, but
online,
so's everyone
hands-on,
else
you
in
gotta come into
Europe.
class and you get that hands-on. You can't learn to run a control room remotely. You can't learn to run a tug if you're not on the simulator there. Where
I'm
you're
not Greek at all.
that. Another area where we really
How
saw
bullish of
changes is in the
reversal
health
signal
sciences,
is the daily
nursing.
hammer candle
And so,
on the spy at resistance?
we have
Also
always
have a gap
prepared licensed
above going into
vocational
Monday.
nurses, associate
Pretty
degree nurses,
bullish.
and we
I'm
have
holding
just
my
gotten
calls, but I'm
approved
buying some
from the
puts at
state of
close.
Texas to do a Bachelor of Science in nursing because so many
Oh
of our
shit, it is
hospitals were
closed.
going to
Hold on, I need to
BSN.
get some puts.
Through COVID, that's all changed. What we're doing right now is we're working on a pipeline from CNAs, certified nursing assistants, to LVNs, to associate degree to bachelor, so that our hospitals have that team approach.
Oh, good. Just
And
what we
it
need.
has
More
really
medical
been,
experts.
When I called them, they were like, no, Brenda, don't stop those LVN programs at CNA. We need you to help build that pipeline.
Yeah, God
In the
forbid.
state of Texas, something that's been very creative that's just starting is our Texas Workforce Commissioner, Julian Alvarez, has set aside $15 million so that we can have apprenticeships in nursing programs. So before, students were doing clinical.
What are you on about everyone being Italian? If you're white, you're a little bit Italian.
Right now, that's
right? Like they
redesigned
spent
so
like
that
2,000
our
years just
hospitals
raping
will have state
everyone.
resources to help do apprenticeships.
That's what the
and
Romans
move into
did.
these fields. So it has really been all relationship building. Tell us how it's changed, and let's figure out how we're going to redesign this together. And it has really, I think, served us well.
It's like
We had a
Genghis
big industry
Khan.
forum yesterday, about 800 people,
Yeah, and the
and it
Mongols.
was focused on petrochem and maritime. The demand for those jobs are there.
That's just history.
The biggest thing is how do we make sure they've got the aptitude and the skills?
I'm from
And
north
how
of
do we
Hadrian's
help
Wall.
build the
They didn't get us. Not till
really building
later.
a safety
Till the
culture,
Holy Roman Empire.
time
They took their
management,
time.
All those soft skills that you hear about, we're building those into the curriculum. And that's what we keep hearing about from our industry partners. When I hear about the demand, same thing I heard on that side. The retirements, our companies have about 20% to 25% of their production people are ready to retire. They want our pipeline to continue. They said, don't pull back, we're hiring. And so they are pretty much hiring every
Sheila
recruit
and
that was
Villain,
being put out.
isn't this lady upset that white men aren't attending college?
It's about
Isn't having
95%
women be
white.
better
And
than
again,
men
with
the
65,000
thing
when we
feminists
started,
want?
it
Maybe
was
men are
pretty
more than
impressive.
just their penis after all. Relevant Justice
Challenges,
League TV
I can move
show,
to the second question.
Season
the
1,
barriers.
Episode 14. You're really on one today,
The
Daniel Taylor.
Higher Education Emergency Relief Fund.
White education
that was
shill.
provided to colleges. has
White
been
male
amazing.
education shill.
What we were able to do with that, we received about $78 million of that. About 40 million went directly into students' hands, and so that they could finish courses. We wrote off debt. You know, we had them retake classes if they failed that first semester of COVID. We had them retake classes for free. We got additional training funds from Texas so that we could take people who had some college but hadn't completed, and we could pay for that. So we've been able to put a lot of resources in to get people.
Who's the
trained
stupidest
and-
person in
and
this chat
really
who could
help
be in the
support 'em.
meeting and affect
That's
the
all
spy?
running.
Popcorn trader.
And so, as you heard about the food needs, I have food pantries.
Or
on
Daniel
every one of
Taylor.
our campuses. We're distributing food. We have free cafe meals for students coming from our high schools who are on free and economically reduced lunches. We provide that food. Mental health counseling.
Esquire.
Huge
Sorry.
resource that we're
I forgot
putting
about
in
his
place,
Somali
and our
and law
community
degree.
Partners are so important for us, making sure we've got those resources. But so much of that is running out. And from a budgeting standpoint, we receive some funds from the state, about 24%, and then the rest of our budget is split between taxes and tuition and fees. We haven't had a tuition and fee increase in 5 years. We will need to have one next year. I can't.
Yeah, you're a little
sustain,
bit behind everyone
the
else.
salaries I'm having to pay and just the cost of operating.
Just be honest, you
without
move
that.
slower in Texas.
Property taxes have been our sustaining. I mean, our property tax revenues are really increasing. We operate very much from a conservative standpoint, trying to be, we realize the taxpayers are huge supporters of us and we need a great partnership. But I see tuition and fees having to increase next year. And just so you know, we're pretty economical. Our tuition rates are $78 a semester credit hour and $135 a semester credit hour. So you can go full-time with us for less than $1,300 a semester. And we also have put in place, we had started it before
Oh,
COVID,
happy
but
birthday,
we've kept
Pickled
it in
Hole.
place and we're expanding it.
Have fun in New
It's open
Jersey.
educational resources.
I mean,
so we've saved our students
Little
$26
Vegas.
million in costs related to books because we've gone all online. And so everything we're focused on is how do we reduce costs to
How do
students,
they
but
get their
deliver
interns to find these
product.
people? It's like, go out and
So
find me the
that's kind of
least
the summary.
successful food
There's a lot
bank,
happening,
community
and
college,
I see
manufacturer,
incredible
small
potential,
business
but it really is
CEO,
how do we
an
make,
amateur
people
guitarist.
see they've got to get the skill sets to get into these jobs.
Bring them to this meeting. Pay their airfare. We want to hear from them.
The partnership with industry sounds really interesting and very important. Does industry
Oh,
help
shit.
at all with tuition or
Jpow's got his
apprenticeships
eyes
or
on you.
things like that? It sounds like they're quite.
She's
involved.
his type too. She's
They
got
do,
she's
on-
got a blue suit,
one of
no
the things is,
ascot.
In our industry,
That neck is exposed.
I hire people from those fields. Person running my
Jpow's not
petrochemical
bored anymore.
Manager retired. He's got those relationships, and he's building those apprenticeships and those internships. Sometimes we don't use apprenticeships because it's got some baggage with it at times because there's some reporting requirements and things. But we get
Yeah,
creative
glasses
and
off, everything.
So they do pay those. They are on our campus.
Yeah,
They're
ding ding.
observing our-
Day's done.
Our courses, they're helping. So one of the things also, I need faculty who are up to date on practices. So our faculty write a paper on what they need assistance with, and they go out and do an externship. And industry pays for them to be back out.
Jpw looks like a tired turtle.
So the support from industry is amazing. We had a job fair last week for Petrochem. 33 companies came out. They're helping our students write resumes, helping them interview.
Christine
what
Lagarde
is
might have
the
to cut a
organization's,
bitch.
Hypothesis about the gender differential with respect to men and women returning to school or your campuses or not?
So one of the things that there's always a hypothesis, right? So that first year, so one of the things we did through COVID is we had Sanjak Cares calls, and we had 600 employees calling out to our students, those who have come back, just checking on them.
Hashtag potato
Since that time,
time.
those 2 years, we've made over 60,000 calls. And it's really, they started out, we just want to check on you. What do you need from us? And at first, the males, it was more, I need to work, and I can't juggle all of this. And right now, it seems to be more the women, and it is more, I need to take care of the family. So it's all over the place. But I've been concerned about our male enrollment for a long time. And so that's been just one of those trends that we've seen. And so it is really, how do we better serve the male student also? Is there something they need from us? And those are the conversations we're having from them.
Context, Jesus.
From our parenting students, and about 40% of our students have, our parenting students, they need a childcare support. So we've used funds from HERF, we've used Perkins funds, and we're paying childcare for them now. We used to make it where we were paying it after
Guys,
the
go to
fact.
Texas.
Well, they couldn't
You'll get
upfront the money,
service.
so we're paying directly to the facility. So the reasons are all over the place. And
The
everything
anti-white
we keep doing
discrimination
okay,
is a
how do we
racket,
put a
great
holistic
racket.
student service
Replace
support?
competence with incompetence, scream racism when failure occurs. Using
Now
self-induced failure as
to,
evidence of
Nancy
racism.
Lamont. Nancy
Attack anyone who
Lamont is responsible
disagrees.
for advancing,
Double down and repeat.
AARP
Like a
social
future
mission on
swap
behalf of Americans
virtue
over
for
50 and their
vice.
families.
Yeah.
She leads the federal and state advocacy work, and she also oversees public education programs, community engagement, volunteer efforts, and multicultural outreach. And we have benefited greatly from Nancy's insights. I think she's participated in 5 listens. This will be her 3rd. So welcome back, and we really appreciate your insights.
Okay,
my
so
first question, I think,
unfairly,
relates to our
I thought
earlier
this was
discussion.
Janet Yellen.
Where are these 2 million early retirees, and what is it that led them to retire?
Oh my
that might
God,
be
they have
different
the
than
same
pre-pandemic,
dress?
And are any of them coming back?
Well, let me
No,
join the
never
chorus
mind.
of people thanking you all for inviting me. As you said, I've been here before, and I appreciate coming back. But I want to add to it the importance of these listening sessions. And you were one of the first to do them, and I applaud you. You know, when you get to be my age, you've been to a lot of focus groups, and you've been to a lot of sessions where you listen to people. And we had some about 4 months ago.
I've
and I
never
kind
been
of
to a
tuned in
focus
thinking, well,
group.
more of the same. And it was
Synthetic
women
Yellen.
over the age of 50, women between 50 and 60. And their message was, we're just invisible. We're invisible to elected officials. We're invisible to you people in Washington. And I wish they all would just walk in my shoes. And to the extent we can, I think it's hugely important. And we don't acknowledge that enough. We've just launched an effort called In My Shoes, where we invited people to send a message. We got 31,000 stories within a few days. And I just mention this because sometimes we kind of think of these sessions as not having an impact, and I know they do. And I appreciate that very much. But on to the topic you want to talk about. So first off, it's hard to overstate how important COVID was to older Americans. We turned on the news every night. And
Is she
heard
like an
people most
AARP
vulnerable.
representative?
We turned on the news and saw that the majority of deaths were people who looked like me and were about my age. And so all of the surveys about everybody wanting to get back to work, getting back to restaurants, et cetera, we were a little far.
Have a good one, Huge
with
Steve.
that. And now it's a little different, but it depends on where you live. And I can't stress that too much. I have a cadre of 20,000 volunteers who work with us across the country. And you get on the phone and people from some parts of the country say, why don't you just fly out here and do some events with us? We need to be out in person. And I sit there and say, I can't get my staff to come into 601 East Street, Washington, D.C.
I unfairly thought Mrs. Puff was about to talk about her boating school.
So I mention this because it is the environment in which we're
Thanks,
operating.
JC, for being
And
in
it's
my
the
cadre.
environment That,
This
to your
handsome
question,
woman's voice
I
sounds
think
like my dad's did
we
before
were a
he
good
left.
Part of the Great Resignation. More people in the older age cohort retired early.
She has
into
a
the
deep
pandemic.
voice.
There were a number of
There's
reasons.
nothing wrong
for
with a
that.
deep voice
Some
on a
was
woman.
that jobs disappeared in industry, especially where older women were working. And so that was part of it. Second were direct health concerns and health
Yes,
risks. And I
AARP
don't
Chief
think that would
Advocacy
surprise
and
anyone.
Engagement Officer,
Third,
Executive Vice
caregiving
President.
needs.
When did the
Before pandemic, there were
AARP start saying that they don't have a
48
sway
million
in
people in the United
politics?
States who were family caregivers. And almost overnight, that number grew. And not just for the person you might have been caring for before the pandemic, but all of a sudden, especially older Americans, were taking care of their kids and their grandkids.
Yeah, I have
They
puts
were
and calls,
teaching,
3,700
as part of the remote
calls,
school
and I
operation.
have puts
and so all of
at
that, I
3,650.
think, accelerated
So strangle.
what we've called the great early retirement boom. The fact of the matter is, and I hesitate to say this because I know you read data more carefully than I do, we did not see a dramatic increase in claims for Social Security. A little bit of an increase, not as dramatic as you would have thought given the numbers. So what we took from that was this notion that
That's because they all
that this
died
may
of
not be
COVID. You just said that.
that it may not be a permanent.
She just
setback,
said everyone old
but,
died from COVID.
It's going to be very
and then said that
important, I think, to
claims on
watch.
Social Security were down.
There is an increase of older people going back to work. Data shows it is not to the pre-pandemic level. but
Seems like
it's
a
moving in that
counterintuitive
direction.
argument.
And there are several reasons for that. First is, like everyone, people have been cooped up in their homes. They're anxious to get back out. By the way, we're seeing an uptick in volunteers as well. So not just
Right,
going
so
back
old
to
people
work,
need to
but
work
trying
and
get
they're
back to the
volunteering?
volunteer workforce. An awful lot of people.
God, maybe
looking
our
for food
generations
banks
are
and
just fucking
opportunities to
useless, guys.
serve our constituency.
These
So we're
60-year-olds
seeing
are out here
more interest
volunteering
in
and
going
working
back to work.
full-time and not
of
claiming
course,
any
another
benefits.
factor in that is if you're on a fixed income or you're not working at all, you need to go back. And there have been a huge number of stories about how we older
You know what?
boomers are
They really are the
sitting
greatest
around
generation.
with all of these resources.
I don't
trying
have time to
decide on
volunteer.
our favorite alma mater and our favorite child.
And I don't
to
even
give
do
them to.
anything all day.
But the fact of the matter is that isn't the dominant group. About half of people over the age of 65.
How
are
can
living
old
on
people
Social
volunteer,
Security. The average
work,
benefit's what,
and be dead
$1,700
from
a month
COVID
or some other
simultaneously?
savings. So about half of people are in a situation where, particularly in the current economy, they have to think about work. And so thinking about work, either going back full-time or more likely part-time. We all think the gig economy was invented for millennials, but the truth of it is, even before the pandemic, you saw an awful lot of older so-called retirees.
Yeah, really? How many
Uber drivers.
boomers
The
aren't the greatest
fastest-growing
generation?
cohort
How many
of
fucking jobs have
Airbnb
you worked
hosts
while you were dead?
were women over the age of 55. And we'll probably see that as the pandemic recedes. Airbnb is starting to see more older people putting homes up. And I think that will continue. And I guess the question is, the great imponderable is, will businesses turn to older workers? We know age discrimination is real. We do surveys all the time. We do so many surveys that I'm convinced we shouldn't do any more because they show us that most people over the age of 50 believe there's age discrimination because
Kirk is staying live to make up for his
and
incompetency
kind of
this week.
looking for
You're just trying to
opportunities
get me
for
to say
meeting
something mean to you so you can finish jerking
with
off.
the Secretary of Labor, Secretary Walsh was the leader as the mayor of Boston in working.
You're a
on
good
behalf
guy,
of
Digital
older
Good Time.
Bostonians, to look at the programs that are being put in place, look at apprenticeship programs to make sure that there are opportunities for older workers. And again, by older workers, we don't just mean people over 65, but over 50. Now, believing popular culture is always far ahead of us. You may have seen this. It circulated rather widely. King Charles, 73-year-old man, finally gets job.
He
was
did.
Very popular in my network. I don't know. I don't know about you.
Was this funny?
But we really do have to continue to slug away at
Good
age
old sausage
discrimination.
fingers.
Ironically,
Finally a big boy.
The pandemic made organizations like ours and others work towards digital literacy among older Americans. It became necessary if you wanted to get a COVID shot, And now if you've got those kinds of skills, I think it's easier to move back into the
I have
labor
digital
force.
literacy
And then
skills.
finally, when I think about how people think about retirement, I always remember a New Yorker cartoon. I may have mentioned it in a previous session, which is
This
a
lady's
husband and
got
wife
jokes.
standing there looking at each other, and one says to the other, you know, we'll just squeak by if we take
Don't
a late
be
retirement
humor
and an early
jealous.
death.
So my second question is, last time you were here, we were talking about, the difficulty of living, on savings with low interest rates in a low inflation environment. Here we are. A lot of the folks you're with are on fixed incomes, but you have a high inflation environment, but also a higher interest rate environment. So just interested in hearing how are seniors dealing with this new environment of high inflation, higher interest rates.
Well, it won't surprise you. Certainly, older Americans, people on fixed incomes, are very sensitive right now to costs. In terms of, as we talk to our members, food prices are probably the highest. Gas prices are still high, even though
No, market's still
our
rallying.
folks probably aren't.
They liked the
driving
joke
as
about
much
King Charles.
as others. And then the third area is medical costs. And we've just worked for a number of years on prescription drug costs because it's what our members told us was terribly important to them. And we used a graphic of if
yeah, I know the market closed.
Milk and bread have risen.
I'm watching this fucking meeting. It's the funniest shit I've seen all week.
A loaf of bread would be $13. And it was very effective. I'm glad we got the bill through before anybody's doing graphics on what things cost now. But it really cemented for us this notion that particularly if you're older, healthcare costs, medical costs are a far more dominant factor in what you're focused on. And I would say one of the things I've taken from this
It's a socialized
period as we
medicine.
talk to our members is the ongoing concern, which will go well beyond this period we're in now. How are people going to pay for long-term care? How are people, with the nursing home situation, everybody focused on care in the home. And as if that's so much easier and so much cheaper. And I think we all know it's not. And that is,
She
I think,
speaks
the
for the
abiding
shareholders.
question, for particularly older Americans and their families as we move ahead.
All right, so we're going to forego a question this time around to get Wendy in, and then we'll come back if we have it.
Oh, it's Wendy.
At the end. I want to now just move to Wendy Valise. Wendy is board president for Farm Worker Housing Development Corporation, which is a nonprofit in Woodburn, Oregon. FHDC provides leadership for stronger and more secure families and communities through affordable housing, social services, education, and economic development. And Wendy's a third-generation Latina Oregonian and received her BA in Business Administration from Eastern Oregon University. So Wendy, welcome. And I want to just start with asking you what you're seeing in terms of lower-income households' ability to keep up with housing, rent payments, and other financial
What are her
obligations.
hobbies?
And
I
what
thought
are the obstacles these families are facing in terms
I thought they
of
went over that.
establishing some amount of financial security?
Well, thank you. Thank you for having me here. I'm very
What's an
pleased to
Argonian?
share the voice of our low-income residents across this country, and certainly in Oregon, and farm workers. So it is a similar story to what you're hearing. The folks are struggling. And when we talk about those that before the pandemics that were barely
Like from Elder Scrolls?
and then you compress the pandemic, they just got further and further behind. And so we're seeing very difficult choices being made by families. A portion of the residents that we serve, about half of their income is dedicated to housing. And
No.
and we provide affordable housing, so they are having to make very difficult choices about what they do with the rest of their wages. And what we consider critical, essential items in our lives: medical care, the prescriptions, education for our children, whether that's the trades or going to community college. These are all very difficult decisions. It is in a place
I
where
used to be a
families
trader
are
like you
working,
until I took a
their
margin
children
call
are
to the
working.
knee.
And so it's become increasingly
Rough.
difficult for them. In terms of the barriers, one of the key barriers is certainly language. And we learned in the pandemic that communities of color were
Why are all the women
disproportionately
wearing blue?
impacted by COVID. And so part of the
Because
work
they
that we did
decided
at
that red
Brokerage
outfits were
team,
too
we
enticing
took a little
for
bit
the
of a
old men.
pause in looking for
So
language.
when you go to the Fed, if you're female, you have to wear
What we
blue.
have to do is really provide a tremendous amount of education around healthcare.
Otherwise, you will
and
likely be
certainly
sexually
COVID
harassed.
and resources. And so language was key.
Have a
to
good
that.
one, Little
A lot
Orphan Danny.
we were unprepared in that way, as much as we.
She's
we
allowed to wear
wished
red.
That were different, but I think
Only
it was
her,
a good
though.
lesson, and I think going forward, those are lessons that we'll use. Another factor is, and I'm going to expand a little bit about what people have been saying. We're seeing low income and middle income families struggling. So when we talk about it, I think that's really important, that these are working families, families with young children, multi-generational families, seniors, and
Why does
we're
she have to
seeing that struggle.
specify Oregon farm
And one of the
workers?
struggles
Are they
is,
different from
when we think
Mexicans on
about
California
ultimately
farms?
in the FHDC, and I think
According to her.
In many aspects, I was
She's
at a
gatekeeping
groundbreaking
Oregon
less
farm
than a
work.
month ago. It was for our Colonial Pass Community of Peace in the Willamette Valley, and one of the new residents, spoke, and what he said is, "What is your dream?" As he just moved in with his family of 3, and he said, "The dream is to own a home." Right, and that's where we want our residents to be, and we take a holistic approach, and we provide education, financial literacy education, what it takes to get a mortgage, how to maintain that, and part of that is being driven because
How to teach people to buy the top of the
climate is
housing
where
market?
we really don't
What the
want
fuck?
them taking their kids out of school to go to the bank with them. We want them to have the
Yeah,
information.
these guys are getting kickbacks
informed.
from the originators.
And so,
That's what they're doing. Community
when I
outreach
said that,
for
it really
fucking
touched
big
me
mortgage.
because, part of the programs that are
You got a job? Why don't
provided
you own one of
today
these?
have a cap on how much you can make, and that's a struggle for working.
Oh, that pisses
families
me off.
And saving, but then recognizing that there is so much that.
It's like, yeah, well, you know, we took these people who tried to escape indentured servitude, debt, and horrible economies in their own country, and we introduced them to our version of it. Welcome aboard.
So access to down payments, loan programs, and the other two that because of the pandemic that we're also seeing our barriers
Nothing says American like 30 years of debt.
Part of the program has always been.
Dork asked you to check your DMs yet. You haven't checked your DMs. For the love of God, man, check your DMs.
They do want to move out of these very minimum wage jobs, and they want to certainly earn more. And so, really working towards stronger partnerships that serves this specific community, because it is.
But he didn't DM me anything.
And so I think that's
squiggles.
one of the other areas that we'd like to see.
Oh, nice.
And then, of course,
that looks kind of good.
Healthcare
Jimmy doing a thing for now.
One of the other lessons that we learned during the pandemic was that the children of the families came to us and said, "We have a serious problem with mental health." And that was something that was new to us, new I think across the country. And so really working strongly with our school districts and with other communities.
What did that just say?
To bring in the right resources for our children. And I think that was.
It said something about nude.
Looking forward, that's an important area for us that we will continue to partner with.
Let me just ask, the ability of your organization to provide housing security for the families in your community, I'm sure there were challenges before the pandemic. How have those challenges changed as a result of the pandemic? Are there new challenges, or do you have to face these challenges differently as a result of the pandemic?
Well, they certainly have changed.
So
One,
fruit picker to box packer, then boom,
deeply
engineer.
humbled
That's how it goes.
that the Federal Reserve Board
And
of
you're
Governors
subsidized
wants
if
to pay our
and you get some subsidized
And
housing
as,
on a mortgage you can't
Nancy
afford.
alluded to, you were one of the first, and we now have a seat at the many tables that we didn't have before.
Her nonprofit works
so to me,
directly
there's been an
with
increase in
developers and loan
integration
originators
with
to
lots
build
of
and
new
sell
partners. We
shitty
had strong
homes
community partnerships
to people that can't
many
afford
of us
them.
have been doing this work for many, many years, and I'm a volunteer.
The American
but many
dream.
of us have been advocating and sharing our voice, but we had new partners come to the table and new invitations, and I think that's one of the what I would call
Good news is when you get evicted, you're really good at packing boxes.
to maintain that. There was tremendous generosity during the pandemic, and I think echoing some of the comments earlier is how do we maintain those relationships? How do we maintain those direct channels with generous donors, with key partners? How do we develop new relationships that will serve our community?
Variable
I think
interest
one
rate
of
for
the
crap houses with
lessons that we
balloon
learned
mortgages.
is
Yeah.
when we provide the right resources and the right tools, that people will, we give them a hand and they will lift themselves up. And so I think
Greg, you need to be up there
that is
shilling
one
your
of the
single
things that
mom
came out of the
apartment
pandemic.
living lending
So,
programs. I
communication,
know.
telecommunication, partnerships, and I mentioned that. The other real challenge, and I mentioned this, is we took a pause on land acquisition.
Nope. She looks like
We
a
were so
like a
focused
ghoul.
on responding that we
It's
took pause.
frightening.
We have the same challenges in a nonprofit world in
Like
retaining
like
and
one of the White
recruiting.
Walkers.
And so it is a thread that is, I think, fits within all of our organizations. We have dedicated,
Poor
passionate
Jpow.
individuals. However, as a nonprofit, we cannot compete with private sector, and we certainly support our employees that want to move on, that have a better paying job and better benefits. They have families, so that was a challenge for us as well. But when we're going through this kind of pause, and we're refocusing on that, we're now competing.
I'd be very
and
suspect of
I believe
a
someone else
box
mentioned it,
packing job at
the
Microsoft.
construction never
I don't
stopped,
think they sell
and they
any
had
physical
really-
products.
And so as a nonprofit, we're now competing with private developers.
Like that might not be the type of box packing
for
you're thinking
limited
about doing.
Space. And that is real.
Maybe have a
very
sit down with
challenging
HR.
for us in terms of a barrier that we need to overcome. In particular, because
No, the
we
Xboxes come
have
from
an
China.
organization like FHDC that is a culturally specific organization. Right, we're very sensitive to the residents. We hear from them. We provide these services. They have their own leadership council. There's a very holistic approach versus a private developer, and what they're trying to accomplish is slightly, it looks slightly different than what we're
The world
trying
always
to
needs ditch
accomplish. I think
diggers.
that's
Yeah.
that's another very significant barrier that we are dealing with today, and will continue. I think the key to that will be the partnerships. We have
It's like a
gained
baby
really
blue.
wonderful partnerships with
It's not really
cities,
aquamarine.
with counties and the state, community-based organizations, school districts, utilities.
If I were to
There's been
design
new
that
partners,
jacket, I would call it
but there's
blue
still work
mint
to be done.
or ice.
All right, we might have time for one question, if any of my colleagues have a
Periwinkle?
question. All right, otherwise, thank you so much, and I'm going to hand it back over to the chair.
All the
Thank
streams
you
are
to both
entitled
of
The
our
World
panels.
According to
This has been,
Gherk.
enormously
It's my fucking
informative.
stream.
And
That's
you know,
how
we
this
get to
shit
spend
works.
A lot of time with data here.
I'm the only one on stage.
But, I personally would say I need to hear narratives. I need to hear stories about what's really going on out there for it all to sort of make sense. And so I think in that sense, we all learned a lot.
Solar-powered robot ditch diggers
appreciate your
from
time.
Boston Dynamics coming soon.
Your input is very, very important to the work that we all do. So we're
Not
very
periwinkle?
grateful for
Okay.
Your contribution. Thank you.
Thank you.
Is that it? We're all done? Okay, it's over. I hope you guys enjoyed this edition of The World According to Gurk. If you didn't, get fucked. You watched it anyway. No, there's not going to be an end of day wrap up. There's nothing to say that I won't just say again on Sunday. I'm not the Fed. I'm not going to do that twice. Guys, remember, don't forget to get Tater Tom trending on Twitter. His information about the incoming potato famine that the U.S. is about to experience will be, well, should be noted. Cataclysmic. Thanks, guys. Have a good one. I'll see you all Sunday, 12:30. Have a good weekend, everybody.